Pat, good to see you. So the big question to me here with all this DeepSeek stuff is this a minor shock that's going to lower the cost of AI infrastructure, boost demand as much or more, or is it the beginning of an ecosystem shift that's going to hit chip and infrastructure valuations for a while?
So I subscribe to the former. I believe that this is going to radically shift costs down, which is exactly what we need to hit those downstream effects that I talk about in every one of these shows. Consumers and enterprises have to buy into the benefits, and if they don't, everything crumbles. And what this does, it accelerates us to get there. And on the other hand, if I look at the future of, let's just say the end game is AGI, that's going to require a tremendous amount of training and the entire ecosystem that goes with it. So I think net, this is a positive for tech. And I think the reason that the markets are responding the way that they are is because of the uncertainty around it and what it means. And NVIDIA, I know they're in their quiet period, but it seems like people want to hear more from them than their statement that they put out today.
Pat, where does it open up opportunity? I know you got some software names that you're going to share with us, but also I wonder about the hyperscalers themselves, because they're all designing their own AI chips that they've put out there with the idea being, hey, you can run some things more efficiently with us. Is this going to cause customers to be more open to that efficiency argument and not just automatically say, give me as much NVIDIA as I can eat, I don't care what it costs?
Yeah, so on the software and SaaS side, the Adobes, Microsofts, Salesforces, SAP, ServiceNow, I think are all going to do well there. When it comes to the AWSs and the Azures and Google Cloud, folks like that, their homegrown chips are even more important, because although they can do training, they primarily have been used to do inference. And that's exactly the breakthrough that we saw here. And if we look back 5 years ago, there was a lot of investment into training for machine learning, and then generative, and then it shifted to inference. It went from 90-10 to 10-90. And here we are in generative AI, it's about 90-10. We will likely see a shift like we saw previously with ML, to where the action is inference. And this is where we've seen NVIDIA put a lot of effort into education, where they're saying, hey, we're really good at training, but we're really good at inference too. And they do have a point, because the low latency, the experience that you need to deliver on the inference side is a lot more complex than it was 5 years ago, and you do need more silicon to do that.
You know, we've been talking about it for a while. You just touched on it, and it's this idea that application and implementation of AI is going to be deflationary. The pricing piece of this, where DeepSeek specifically is involved, what it's offering into the marketplace and what it's charging to do so, I think perhaps maybe perpetuates the deflationary nature of this even further. That, I guess, remains to be seen. But just going back to the House Speaker's comments, I have to think that regulators are going to be circulating around that, or circling, excuse me, around this. If you think there were national security implications tied the data to TikTok, this is going to raise even bigger questions. So it also raises the question, where does a DeepSeek or a Chinese AI startup actually fit in the broader ecosystem and landscape, and how is that going to shake out, not only along country lines, but also along industry lines?
Yeah, so if nothing else, what the DeepSeek reasoning model did is show the power of open source. And it also showed that how, if people are constrained on resources, developers just get more creative. I think what this should send to the administration is a sense that you may think you're able to cut off and reduce access to leading edge GPUs, and you think you know what the end result is, but I think DeepSeek has shown that approach is very much incorrect. And I do think that the latest restrictions that were set up by the final days in the Biden administration will probably be overcome because people are going to realize that it's almost impossible to restrict trade of something that's very small. And even if they do restrict it, they will likely find a creative way around it.
Pat Moorhead, thank you for joining us. Great to have you today.
Thanks.
After the break, the ripple effects of an AI reset. We're going to talk to JP Morgan's global chairman of investment banking about how deal flow and money flow could shift following DeepSeek's emergence.
And yeah, later, NVIDIA bulls are licking their wounds today, but the pain is even greater for investors in leveraged ETFs tied to NVIDIA's performance. We'll look at that part of the fallout ahead on Overtime.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
When you use Point Me, you need fewer points for every trip, like 50 to 90% less than your credit card travel portal. So a round-trip flight to Italy that may have cost 150,000 points drops to just 35,000 points for the same exact flight. Search with Point Me.
Your loved ones are getting older, and they need your support. Care.com is here to help. It's an easy way to find background-checked senior caregivers in your area and some peace of mind. See why millions of families have trusted Care. Go to Care.com now.
Your cardiovascular health impacts everything, and we mean everything. Blood pressure, circulation, and energy production for starters. So here's a radical new approach to cardiovascular health support. From the brand with more 5-star ratings at Walmart than any other beet brand. It's Super Beets by Human, the #1 cardiologist-recommended beet brand. Discover how Super Beets cardio-powered ingredients support so much more than heart health. And for a limited time, get a free month supply on all bundles at superbeets.com.
At State Street, we know everyone's trying to get somewhere. Take the next step toward your future by investing in the S&P 500 with SPY. Getting there starts here.
Where do tariffs fit in? They are an economic tool. They're an economic weapon. The question is how they get used.
We've reduced our China exposure from 50 to 25%, and we've been working to reduce it even further.
It cannot be about removing all the rules. It's about all of us operating together.
The partnership with OpenAI to us is a critical partnership. We love it. It's working.
If you use the U.S. estimates of how much power we're going to need, we're talking trillions of dollars. And it's all for data centers. It's all for AI.
If you want to manage your own portfolio, learn how I do it.
One of the key benefits for me is knowing where Gene is going to buy or sell before he does it.
Get invested. Join the club today. Go to cnbc.com/join Jim.
Welcome back to Overtime. The emergence of China's DeepSeek AI model has brought up big questions about the enormous amount of money being allocated to AI. Joining us now is Jennifer Nason. She is JP Morgan's global chairman of investment banking. Joins us here on set, and it's always great to have you. Welcome back.
Great to be here. Thank you for having me.
So I am going to start there because you run investment banking at JP Morgan. You have a particularly expert purview on the tech sector, and one of the conversations we've had on the show in the past couple of years is how much money is going toward AI investments and how companies are gaming this out. So when you hear about the innovation of DeepSeek, what does that do to change the narrative, if anything?
So I'm not sure yet, but I will say it felt like DeepSeek got thrown on the table this morning and nobody had ever heard of them before, whereas there's been a conversation, certainly in the Valley and amongst the tech industry, about DeepSeek for a while. So I do think it's a name that just suddenly got into the zeitgeist today, and we'll actually have to do a little bit of work, I think, to figure out what this all means. But I personally think moments like this, where we see step function changes in how AI is evolving, is ultimately good for all of us. And certainly if we can make it cheaper, that's going to accelerate innovation. But I wouldn't go thinking that NVIDIA is somehow no longer relevant to this story. So I think everybody needs to take a breath.
Does AI still continue to fuel the deal-making pipeline here, or is that expanding out, especially with the Trump administration now?
No, I think it's core to everything we're going to be doing in technology going forward. And I've heard comments today about things like we're hitting data walls, or suddenly this is all getting commoditized. I think that is not likely the case. There's so much innovation going on at the data level, at the algorithm level, and at the hardware level. With chips. So I'm not even sure we're at the first inning. We may be just picking up the bat and getting ready to swing. So I think there's a lot of positioning for a lot of companies, and it's not clear where the money's going to be made ultimately. What is this pie going to look like, and who's going to get what slice, I think is still to be determined. And I've been around long enough where rollout of the internet, rollout of mobile, it wasn't clear early on where the money was going to be made, but we know now how the pie got shared.
Well, speaking of, Jennifer, maybe you can help me out with perspective on this. You entered, I believe, JP Morgan's TMT business about 25 years ago, just as the dot-com wave was cresting, but also something else happening was the rise of open source. And open source shifted where the value was in the enterprise ecosystem pretty dramatically. How much potential do you see for something similar to happen here with DeepSeek in AI? How's that going to affect the way things are valued?
Yeah, so Chinese open source, I think, may be in its own category, but the debate around open source versus closed systems has been around as long as we've had software. And I can give you arguments on both sides of that equation. I think if you're Microsoft or you're Google and you're investing billions and billions of dollars in building out the infrastructure, I think open source might be a little scary here, but it's clearly the best way to foster innovation and to have transparency in how these models actually work, because there's a lot of value judgments in these models. It's not like a calculator. It's making a lot of value judgments in how it assesses and analyzes data.
We're still near all-time highs now for the S&P, despite today's downdraft. We've been talking a lot about animal spirits. What are you seeing in terms of M&A activity this year with Trump at the helm, in terms of IPO pipeline finally starting to open?
So I'm always optimistic when I come on, Morgan, and I'm as optimistic as I've ever been. 2024 was a great year for deal activity, for IPOs and for M&A. Tech, a little bit behind. We need to see more tech IPOs coming to market, and we're hopeful we'll see that in 2025. But the mood is good. There's euphoria in many places around what the Trump administration might bring. Nervousness around interest rates, clearly a big looming issue. But the mood is good, and we're certainly gearing up for this to be potentially a record-breaking year for investment banking activity generally.
Very quickly, you're getting ready to retire from JP Morgan, 40 years in investment banking. You've seen these types of cycles before, I take it?
I have, and they're exciting, and you have to buckle in, and you have to be prepared for days like we had today. But there's a lot to be optimistic about, particularly in the US and particularly in the US tech sector.
Jennifer Nason, it's a pleasure to have you here on set. Thanks for joining us today.
Well, it's time now for a CNBC News Update with Kate Rooney. Kate.
Hey there, John. A top Trump-appointed prosecutor opened an internal review of the Justice Department's January 6th riot cases. Sources tell the Wall Street Journal the acting U.S. attorney, Ed Martin, asked prosecutors today to turn over files, documents, and notes and other information related to those cases. The Justice Department has yet to comment, but it does come a week after President Trump pardoned the January 6th defendants. Israeli Prime Minister, meanwhile, Benjamin Netanyahu is planning to travel to Washington next week for a meeting with President Trump at the White House. Sources tell Axios it's a gesture from Trump for agreeing to the Gaza ceasefire deal. Should that visit happen, Netanyahu would be the first world leader to meet with Trump since he returned to the White House. And NATO deployed its first coordinated response to the Baltic Sea after another deep-sea cable was damaged between Sweden and Latvia. The incident is the latest in a string of alleged deep-sea attacks in that region. Western officials have said Russia is behind the attacks, allegations that Russia has denied. Guys, back over to you.
Okay, thanks. Up next, where investors looked for shelter from the storm in today's tech wreck, and if safety trades are back in fashion. We'll be right back.
Power E-Trade's award-winning trading app makes trading easier. With its customizable options chain, easy-to-use tools, and paper trading to help sharpen your skills, you can stay on top of the market from wherever you are. E-Trade from Morgan Stanley. Power E-Trade's easy-to-use tools make complex trading less complicated. Custom scans help you find new trading opportunities, while an earnings tool helps you plan your trades and stay on top of the market. E-Trade from Morgan Stanley.
Introducing the RexFang and Innovation Equity Premium Income ETF, FEPI. FEPI invests in leading big tech stocks while balancing growth and income. Combining tech growth with premium income, FEPI offers a unique investment opportunity. For more information, including the fund's standardized performance, SEC 30-day yield, and current distribution rate, visit rexshares.com/FEPI.
Here you go.
Is there any way to get a better price on this?
Have you checked Single Care? Whenever my customers ask how to get a better price on their meds, I tell them about Single Care. It's a free app accepted at pharmacies nationwide.
Before I pick up my prescription, I always check the Single Care price.
It's quick, easy, and totally free to use.
Single Care can literally beat my insurance copay.
You just search for your prescription and show your Single Care coupon at the pharmacy.
So I just show the coupon and get this price?
That's right. Go to singlecare.com and start saving today.
Learn how to use AI to be more successful with CNBC Make It's new online course.
We'll give you examples that can help you master AI tools.
Special offer ends February 11th. Go to cnbcmakeit.com/AI and register now.
Hi, I'm Cade Courtley, and welcome to the Ford Patriots Buy One, Get One Solar Generator event. Claim the Patriot Power Generator 2000X, and you'll get a free Patriot Power Sidekick with 2 free solar panels. These are 2 of Ford Patriot's silent, fume-free solar generators that can power your fridge, TV, and critical devices without ever needing gas. Every American should have the peace of mind that comes from having backup power. Visit FordPatriots.com to secure your free generator and solar panels now.
I'm Dr. Shannon Klingman, the inventor of whole body deodorant like Mando. It's clinically proven to block odor all day and controls odor for 72 hours. Mando's unique formula stops odor before it starts. That's my secret to better odor control everywhere.
Welcome back. Volatility surging, the Nasdaq getting crushed today as AI-related names tanked. Well, Mike Santoli returns with a look at where investors looked for safety. Mike.
Yeah, Morgan, traditional places, there was a bid in treasuries. In fact, the broader stock market probably would have had it a lot worse if you did not see treasury yields coming down. This is the 10-year yield. Interesting, we came right down to this point where people might say that's the little uptrend line from the fall as we got that yield shock. People thought about a hawkish pivot from the Fed and all the rest of it. Just came down onto it. So we haven't broken down yet. We do have the Fed meeting this week. A lot to be said about which direction this goes. But it was definitely supportive of broader risk assets outside of tech. Take a look, too, at lower volatility S&P 500 stocks relative to the more aggressive, jumpy ones in the high beta ETF. That's SPHB. Pretty much kind of crossing each other here in terms of one-year performance. Now, just for, kind of putting names on it, SPLV, top holdings, Coca-Cola, Berkshire Hathaway, Procter & Gamble, Colgate-Palmolive, SPHB high beta. It's basically Palantir, Supermicro, Broadcom, obviously some of the more aggressive, growthy, and expensive names. So you're seeing that essentially a little more of an even playing field after the aggressive parts of the market had outperformed for most of last year and even into the latter part in December as well.
All right. Mike Santoli, thanks.
Yep.
Well, Apple, real bright spot today as it avoided AI competition questions raised by China's DeepSeek. It was up 3%. But up next, we'll look at why a different kind of competition in China could be a concern facing Apple when it reports earnings this week.
Plus, retail investors chasing the AI trade through leverage ETFs. That got absolutely crushed today. We've got those details later on Overtime.
I started Lucence with the mission of bringing earlier cancer detection to a much wider group of people all around the world.
Singapore is really where it all comes together. We have a strong ecosystem with good connections across all the different players that can have startups succeed in bringing good healthcare solutions to the rest of the world.
What the biggest companies deliver is an exceptional customer experience. What makes it possible is unmatched connectivity and 5G solutions from T-Mobile for Business. T-Mobile connects 100,000 Delta Airlines employees, powers Tractor Supply's stores nationwide with reliable 5G business internet, and partners with PGA of America on game-changing innovation. This is how business goes further with T-Mobile for Business.
To make effective, healthy blood pressure support supplements takes more than innovation. It takes vision. That's why we founded Human, to revolutionize how you look at your health. With supplements like Super Beats that put your cardiovascular system at the center. Effective, convenient, and easy to enjoy cardiovascular support for every day. Inspired by innovative science with clinically studied ingredients, like the grapeseed extract in our heart chews, for nearly 2 times more effective blood pressure support than diet and exercise alone. To help you do more and be more. That's our vision. It's why we're leading the way. Because cardiovascular support is about more than just your heart health. It's about everything your heart beats for. Get a free month supply plus free shipping on all bundles at livehuman.com.
We're Mizuho. Sound familiar? Backing the company battling eye diseases? Mizuho was there. Financing one of the pharma companies revolutionizing weight loss? That was us too. Anywhere you need a corporate and investment bank, we're there. Mizuho Americas.
No application fee if you apply by February 12th at University of Maryland Global Campus, offering online and hybrid courses and lifetime career services. Learn about our more than 135 degrees and certificates at umgc.edu.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Welcome back to Overtime. Big tech is facing big AI competition from China. That's the reality that brought the NASDAQ down today, and it's going to be a big theme in Apple's earnings this week. In today's China Lens, our Eunice Yoon brings Overtime a closer look at how the smartphone matchups look to the consumer in Beijing.
Behind me is one of Apple's first stores in China. The company's been facing a lot of competition these days, like those guys.
Huawei has become Apple's biggest rival in China, despite, and maybe because of, Washington's clampdown on the Chinese tech giant on national security grounds. As a Chinese, I definitely consider Chinese brands first, this man says. It's a matter of national pride.
Huawei has a reputation among Chinese for having technology on par with Apple, including a very competitive camera, which is an important feature for many Chinese.
All the Chinese brands have been upping their game with better features and technology. And the perception is they're narrowing the gap. There isn't much difference among all the phone brands anymore, he says. There's a myriad of models, foldable, super thin, professional lens, screens that double as a tablet, all appealing to Chinese consumers who are constantly on the hunt for something new. Brands like Xiaomi, Oppo, Honor, and Vivo are moving into higher price levels, typically Apple's domain.
Historically, Vivo is known to be a cheaper brand, but look at these prices. The best seller is over $800.
But the iPhone still has its army of loyal fans. Apple holds roughly 1/6 of the market here. The big thing to watch is AI services. Apple's competition is all in on AI. Today, Xiaomi's AI can edit out strangers from photos. With a scribble, Honors can move items searched on one app to buy on another. And Huawei's helps you share files with a flick of your hand. Well, most of the time. The AI may not be a draw for Chinese consumers today, but looks to be a point of competition in China's refashioned phone landscape.
Eunice joins us at a crazy hour there in China. Now, Eunice, great stuff. You showed us some smartphone AI features there that are a bit ahead of what we see in a lot of phones here, and maybe it hasn't quite caught on yet, but what's your sense of how much investment is going on in that, and maybe even how much buzz around DeepSeek's impact over here?
Well, there's a lot of investment going into AI, but as you pointed out, from an everyday user perspective, a lot of these features aren't really driving people to various phones. So, but of course, the competition is fierce. Companies want to have an AI solution. And then that does pose a problem for Apple because Apple Intelligence isn't here. But there's a big belief that if Apple doesn't come up with some sort of solution, get through an arduous regulatory process, that could be a problem for Apple down the road.
Eunice Yoon with great on-the-ground reporting. Thank you for being with us. Up next, an exclusive interview with a man that could be the next CEO of U.S. Steel if activist Ancora gets its way.
And if you thought NVIDIA's drop was severe today, the pain for leveraged NVIDIA ETFs, much worse. We're going to look at the rise of these products ahead on Overtime.
With a Shield Level annuity from Bright House Financial, your portfolio can benefit from growth potential with a level of protection from market volatility to help you follow your plans wherever they take you. Bright House Financial. Build for what's ahead.
Create tomorrow. Start today. With new investment products backed by superior risk management. Asset management in a time of disruptive change. Financial well-being accessible to all. Calabas. Today for tomorrow.
At Morgan Stanley, old school hard work meets bold new thinking. Partnering to unlock new ideas, to create new legacies, to transform a company, industry, economy, generation. Because grit and vision, working in lockstep, puts you on the path to your full potential. Old school grit, new world ideas. Morgan Stanley.
The pop culture collectibles market is valued at over $5 billion, growing 9% annually. Meet Alliance Entertainment, symbol AENT on the NASDAQ, a profitable global entertainment powerhouse with over $1.1 billion in annual revenue, executing on its growth strategy with the acquisition of Handmade by Robots, creators of limited edition collectibles from your favorite movies, TV shows, games, and music icons. Alliance Entertainment, AENT on the NASDAQ.
This tiny home trend, not for me. Now this is more like it. The same goes for my footwear. So I went hands-free with wide fit Skechers slip-ins. Just step in and go without bending down or touching my shoes. Wide fit hands-free Skechers slip-ins.
No one's gonna give you your dreams. You have to roll up your sleeves and work hard to achieve them. Money doesn't make the world go round. Information does. And CNBC is the great economic equalizer because we provide that information so you can make the decisions that are right for you.
When things go sideways, will you be prepared? I want to introduce you to the Patriot Power Generator 2000X. Use the endless free power of the sun to power lights, your TV, medical equipment, even run your fridge. And that's without gas, fumes, or noise. Go to 4patriots.com. You'll get a solar panel included free, double the capacity, expandable for more power, and more outlets than ever. This is about peace of mind. Get your solar generator and free panel at 4patriots.com.
These bills are crazy.
She has no idea she's sitting on a gold mine.
Well, she doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy.
Even a term policy?
Even a term policy!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
Welcome back. Steel yourself. We've got an earnings alert on Nucor, the steel company just reporting earnings of $1.22 per share, nearly doubling the estimate of 65 cents a share. Revenue also came in above estimates at $7.08 billion versus expectations of $6.76. You can see it was higher, but now it's about flat.
All right, well, we're going to stick with steel. U.S. Steel finishing in the red today after the latest twist in its steelmaking drama. Shareholder and activist investor Ancora releasing a letter to the board announcing it has nominated a majority slate of 9 candidates, is calling for the company to abandon its blocked and currently being challenged in court merger with Nippon Steel, and is seeking the ouster of CEO David Burritt. For the CEO role, Ancora is putting forward Alan Kestenbaum, who most recently ran Stelco, which was sold to Cleveland-Cliffs last year. Now, U.S. Steel responding to Ancora, saying in part, quote, "We remain confident that our partnership with Nippon Steel is the best deal for American steel, American jobs, American communities, and American supply chains." Also adding that, quote, "It's also concerned about the motivations behind these nominations, given Ancora's and Alan Kestenbaum's recent dealings with failed bidder Cleveland-Cliffs." Well, joining me exclusively is Alan Kestenbaum, former Stelco CEO and chairman, and Ancora's nominee to be the new head of U.S. Steel. It's great to have you here on set. Welcome.
Thank you. Thank you very much for having me.
So there's a lot to dig into, but the first thing I want to start with is the fact that what's being put forward by Ancora and what you're proposing to do as their nominee for CEO is to turn U.S. Steel around, and to do so as a publicly traded standalone company that does not need to be acquired by somebody else. How do you do that, especially when everybody, including U.S. Steel, is saying there needs to be some sort of acquisition because there needs to be some sort of infusion of capital to update the plants?
Yeah. Well, let me start by saying the Nippon deal is dead. It's been killed. President Biden killed it. The folks in the Trump administration have spoken out against it for a very, very long time. So, you know, the notion that the Nippon deal is an option is gone. So now what's left is you have a company run by a CEO. CEO has done a very, very poor job in running the company. And it kind of breaks my heart because I grew up in the steel industry, and I actually know that I could take this company and actually restore it to its greatness. And I came up with this acronym, MUSCA, Make U.S. Steel Great Again. And why I'm the person to do it and how I'm going to do it, it's very simple. I bought Stelco from U.S. Steel. It was in the exact same condition. Very, very low morale, very poor earnings, high cost of production. And I bought that company in 2017 from them. At the time, it was just losing money. They lost $1.4 billion in that investment. I bought it for $53 million from them. 4 months later, I took it public for a valuation of $1.7 billion. I then made and returned to shareholders $2 billion. I put $1 billion into CapEx, and I made it the lowest cost steel producer in North America. And so when you ask me about what I can do with these plants, Dave Burritt has said he's going to shut these plants down. Well, first of all, he's just shooting from the hip, because if you shut those plants down, you also need to shut the mines down. And the mines are one of the most valuable assets that the company has. So it's just a sort of irresponsible statement that he made. And my plan would be to do exactly what I did at Stelco and to rebuild those plants, particularly the ones he talked about. Mont Valley and Gary have the opportunity to be even lower cost than Stelco. So I can take those plants, make them very, very profitable, turn them around from where they are today with some very similar techniques as I did at Stelco.
You mentioned the Nippon deal is dead. It's not actually dead. I mean, it was hung at CFIUS, and then President Biden at the time decided, was the deciding vote, and basically blocked the deal. But CFIUS has since extended the implementation of that block by 6 months, so this can go through a court process. So we still need to, if they decide to, they still need to proceed through that channel. We've heard from U.S. Steel. We just read it at the beginning of this, and there have even been some analysts that have raised this, and that is questions about dealings with Cleveland-Cliffs and whether you're, quote unquote, doing the bidding, essentially, of Cleveland-Cliffs in this process, which we know has put offers forward and is still very interested in buying U.S. Steel. Your response?
Yes. Well, first of all, let me respond to the first point. The deal actually is dead. The court process that is being pursued, there is no precedent of any court process prevailing in such a situation. So the fact that they decided to start a lawsuit does not make the deal not dead. The deal is dead. There's no basis for the lawsuit. To say that the president didn't have the authority when he clearly did have the authority is not really a lawsuit. So I expect they're going to lose the lawsuit. In terms of Cleveland-Cliffs, I have nothing to do with Cleveland-Cliffs. I'm an independent businessman. I just sold my business to Cleveland-Cliffs. And I love the steel industry. And I have a tremendous track record, as I mentioned before, in turning around steel companies, not just Stelco. Before that was Globe Specialty Metals I turned around, which was also left for dead. And so to me, looking at the storied history of this company and thinking about the employees I encountered at Stelco and at Globe who were depressed and thinking they're going to be out of jobs, and then you read their own CEO, their own boss telling them they're going to be out of jobs when actually you can go fix the company and make it super profitable, that's what drives me. I have nothing to do with Cliffs. This is what I want to do, and this is what I plan to do, which is to keep it as a standalone public company and make it successful.
So you have been in steel for a while, and so I do want to just take a step back, a more macro question about what we're seeing in the steel industry right now, and that is the fact that you have President Trump now on the helm. We know he wants to continue to spur U.S. manufacturing. He's talked up things like coal, including at Davos last week, on the one hand. On the other hand, the growing possibility of more tariffs, in this particular case on Mexico and Canada as soon as this weekend. Your outlook for steel?
My outlook for steel actually is positive because of Donald Trump. So he imposed tariffs in 2017. Biden continued those tariffs. And most of the steel companies actually became very, very successful. Speak about Nucor, Steel Dynamics, Cliffs. Who hasn't been successful? U.S. Steel. So despite a great macro environment, the only company that couldn't turn themselves around is U.S. Steel. And so I'm very optimistic about the steel industry. I think he's going to continue these measures to give the steel companies and the steel industry time to recover. And when I get that seat of CEO of U.S. Steel, I'm going to be able to take advantage of those environments.
Alan Kestenbaum, great to have you on set. Thanks for joining me.
Thank you so much.
Well, up next, risky business, why the rise of leveraged ETFs in AI trades like NVIDIA cost retail investors a pretty penny today. We'll be right back.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
When you use Point Me, you need fewer points for every trip, like 50 to 90% less than your credit card travel portal. So a round-trip flight to Italy that may have cost 150,000 points drops to just 35,000 points for the same exact flight. Search with Point Me.
At Pony, we hold a firm belief that autonomous mobility will revolutionize our transportation systems. Through hard work, collaboration, innovation, we're just getting started, and together we'll continue to push the boundaries of what's possible.
At State Street, we know everyone's trying to get somewhere. Take the next step toward your future by investing in the S&P 500 with SPY. Getting there starts here.
It's time to grow your business. Time to get customers. Time to make your future now. Create a website in minutes. How? GoDaddy. Coding? Nah. But all that writing? Nope. AI. Done, built, up, and running. You have what it takes. Now take it to the next level. Create a beautiful website in minutes with GoDaddy.
Let's get to work.
Start for free at GoDaddy.com.
Discovering innovation today helps drive growth tomorrow. As a leading global asset manager, PGIM has established a track record of helping investors capitalize on growth opportunities. PGIM Investments, shaping tomorrow today.
Welcome to CNBC's Crypto World.
CNBC's daily digital show has trading updates, the latest headlines, a global perspective, and high-profile interviews. Scan to watch CNBC's Crypto World, sponsored by Crypto.com.
Well, back to overtime. NVIDIA shares plunging nearly 17% today, shutting roughly $600 billion in market cap. That's the largest single-day market cap loss in history. And investors who own leveraged NVIDIA ETFs saw even larger losses. Kate Rooney has the details. Kate?
Hi, John. Yeah, so some real short-term pain during this NVIDIA sell-off is being felt by those who had been trading the stock through these leveraged ETFs. So these single stock ETFs have seen an explosion in popularity since 2022 when they were approved by regulators. This chart from Strategas shows that boom over the past couple of years. They offer double the upside, so that's great, of course, when NVIDIA is leading the markets, but double the downside as well. Not so great on a day like today. There's about $18 billion in these types of semiconductor ETFs alone. That's according to FactSet. There's also a growing list of these NVIDIA long ETFs. So today, NVIDIA down about 17%. These ETFs, these 2 times long ETFs, were down closer to 34%. So tickers like NVDL, NVD. There's other volatile names out there. Think of Tesla and MicroStrategy. They've also seen a wave of these riskier ETFs and products out there. The ownership here, it's largely retail, so less than 10% institutional ownership in these names, and there's a lot of demand coming from overseas. Today, likely a wake-up call for those chasing some momentum through these ETFs, as Todd Stone over at Strategas told me, you must read the label on how these things work and the risks involved. Doubling your money sounds great in theory, but when an event like this occurs, it can be detrimental to your wallet and your psyche, guys.
Kate, I think worth noting, these came out mid-July of 2022. That was near the bottom in a bad year. So these leveraged ETFs, single stock ETFs, haven't really stood the test, or at least retail investors haven't, of a bad market.
No, you're right about the cycle there, too. And if you look at sort of the short ETFs, which would be the inverse, they're not nearly as popular because this has been, up until now, a really successful trade. Again, it's very short term. This doesn't tend to be sort of the long-term investor here, but there are people out there that likely made money on this. NVIDIA was the big winner. And today is sort of when the music stops. And you do learn those types of lessons. As you mentioned, though, the timing, I think, of when those launched is key. And there's also fees associated. So as Todd Stone said, buyer beware. You got to read the labels here.
Kate Rooney, thank you.
Thanks, guys.
Mixed day, big tech rout. We get more earnings this week. We also get a Fed decision. And in a little while here, probably a Treasury Secretary.
Yeah, watching video for the bounce.
That's going to do it for us here at Overtime.
Fast Money starts now.
Live from the NASDAQ market site in the heart of New York City's Times Square, this is Fast Money. Here's what's on tap tonight. AI in retreat. Claims of a cheaper, more powerful chatbot out of China sending big tech sinking and NVIDIA to its worst day since the start of the pandemic. But are the concerns overdone, or is the U.S. AI trade in real danger? And out of energy, the once red-hot nuclear energy stocks getting crushed on that same news today. Vistra Energy now negative for the year. Can the sector rebound? We'll debate that too. Plus, a couple market bright spots in today's sea of red. An activist investor tells U.S. Steel to go it alone. And we count down to the first Fed meeting of the year, how the central bank is digesting all of this data, all the market moves and everything else that we're working our way through. I'm Courtney Reagan in this evening for Melissa Lee, coming to you from Studio B at the NASDAQ. On the desk tonight, we have Tim Seymour, Carter Worth, Steve Grasso, and Mike Coe. But we are going to start with the AI apocalypse. Maybe, question mark. China's DeepSeek ravaging names like NVIDIA, Broadcom, AMD, Palantir, Microsoft after its R1 reasoning model reportedly outperformed OpenAI and cost less than $6 million. Yes, million with an M. To design. Now, NVIDIA losing nearly $600 billion in market cap just today. That's the largest single-day loss in dollar terms ever. That's more than the total valuation of names like MasterCard, United Health, and ExxonMobil. The nearly 17% drop in flagship AI stock was its worst day since March 2020 and sent it below its 200-day moving average for the first time in over 2 years. The move in big tech dragging the broader markets down with it. The Nasdaq seeing its worst day since December 18th. The S&P down 1.5%. Remarkably, the Dow managing to end the day in the green. Our Deirdre Bosa joins us now for more on how a company few people had heard of before today, and I'm still trying to make sure I don't say wrong, could have such a big impact on the market, and how much merit there is to these claims. Dee, we all spent a lot of time this weekend and most of today trying to think it through. Tell us what we've learned.
Okay, so AI apocalypse, not so sure about that. But without a doubt, this is a monumental shift in AI. What's real is its performance. We don't have to trust DeepSeek or the Chinese on that. This is an open source model, so we can see inside of it and compare it using third-party benchmarks. It is just as impressive as people say it is. Not only was it cheaper and quicker to build, but it's also cheaper and more efficient to run. So developers are adopting it en masse, as well as American consumers, pushing it to the top of the App Store charts and dethroning ChatGPT. Now, it hit the markets hard today because it raises a ton of questions about the way American AI has developed. OpenAI, Anthropic, Google, etc., have raised and spent billions of dollars to create ever bigger and better models. Demand for NVIDIA GPUs was insatiable, but late last year, and this really started before DeepSeek, late last year, model advancements stalled, and a new race took off in reasoning, or the inference phase. And that was DeepSeek's opening to essentially jump to the frontier and build off what those American companies already achieved. And this is key. It open sourced it. Now it's not just DeepSeek creating competitive models at a fraction of the price. You've got ByteDance releasing one last week. Berkeley researchers, they did something similar for $450 in 19 hours. So whether DeepSeek did it for $6 million or $60 million, that is now besides the point. It's called distillation. The most advanced models on the market right now, they don't need hundreds of millions of dollars in GPUs and infrastructure. And that is a massive paradigm shift for the AI trade as we've known it. Why the sell-off today affected everything from chips to energy to mega caps. Now, the saving grace for the bulls, though, and what I hear from my network in Silicon Valley is that it's highly unlikely that American AI players are going to scale back their spend, those billions and billions of dollars. The race only got that much more important, and the pressure to stay ahead has intensified, and the American companies, they're going to continue to throw money at this because it's existential for them.
This is all just so fascinating, Dee. And at first, I was trying to think through it and thinking, is this good or bad? I mean, isn't competition great? If we can do something more efficiently and less expensive, isn't that good? Maybe not so great for America if it was done by this Chinese company when we're worried about all sorts of other ripple effects there. And that's obviously part of a bigger discussion. But altogether, I mean, how should we feel about this news, even if we don't know exactly what it cost?
So that is such a great point. And there are many in the technology sphere, founders, CEOs, venture capitalists who say this is a really good development, that DeepSeek essentially did what OpenAI was supposed to do all along, create an open source model, democratize AI. That's what DeepSeek did. It is so ironic that that came from a Chinese company. And when you worry about things like, okay, this is developed in China, so are we going to have the same kind of censorship that the Chinese government imposes on their AI companies? Well, again, it's open source. So developers can just take parts of it. And you've actually seen this happen in real time today. Perplexity CEO posted about this. You can just tweak the model so that you can, leave things aside, like the censorship part that won't talk about Tiananmen Square. That is a remarkable development. On the other hand, Courtney, I mean, DeepSeek was top of the App Store. That is the app. That is going to consumers that are not filtering, that are not getting an uncensored version. And I mean, when you think about what we were worried about with TikTok, that's a social media network, worried about influence and propaganda. This is ideological. If American consumers are adopting a Chinese AI GPT, essentially, that has massive geopolitical implications.
Wow, that's just a lot to go through. Deirdre, thank you so much for joining us and for following this all day long. For more on DeepSeek and how it's putting the U.S. place in the AI race at risk, she tried to say, check out our Tech Check digital doc. Scan the QR code right here on the screen or go to cnbc.com/TC Takes. Deirdre, thank you again. I mean, wow. we just went through a lot there, Tim. I mean, when you started to digest the news from the weekend and then you saw the reaction, what'd you think?
Well, first of all, kudos to Debo, who was out on this news well before the market and a few days back, really covering a story that I think caught a lot of people by surprise. But, you know, the reality of what's been going on in the chip wars with China is, you know, what's the expression? I think necessity is the motherhood of invention, and restriction might be the motherhood of invention here, too. And in terms of what's real and what's not, in terms of the cost to develop this, I think there's still a lot of questions. But there's no question, and Debo emphasized this, is that this is a case where what we have here is a large language model that is doing things a lot more efficiently than some people that have been in the market for a long time. So I don't think this necessarily calls into question the 2025 CapEx. And remember, this is a big week for big tech. We're going to be laser focused as we were. We're only a few days from Meta telling us about $65 billion in CapEx for 25. So think about that. But it really does call into question 26. And that's something that if you look back to some of the chip players and NVIDIA notably, that is where valuations are looking at. Look, it comes back to also just positioning in markets. And this is here also what we talk about is just what the markets have. And what the markets had was a very crowded trade, a case where you had a dynamic even just 3-4 days ago. And maybe there's a coincidence to Stardate or not, or, you know, Star Trek or where.
Stargate.
Yeah, exactly. But the bottom line here is I do think this is the kind of news that the market needed. And I do think this is the kind of news that also Carter's going to have a great call on what's broken, what's not on Chartland. But there's still so much faith that had been placed in AI and spend and the impacts that today is at least a wake-up call.
Yeah, Carter, I wanted to go to you. I feel like I can't go too much further into the show without talking about the impact a little deeper on NVIDIA stock today. I mean, do you think that was overblown? And then what about some of the names that are competing with NVIDIA? I mean, because this opened the door for them. Maybe they don't have to spend as much money.
Sure. So obviously, in each case, it's different, NVIDIA versus Avago versus Taiwan. But if you look at ARTI, which is an ETF that covers all AI, and it has those names in it. I mean, it's an 8% drop today, and one could say, I mean, that's a major setback. And yet, the other way to interpret it is you just went back to where it was 2 weeks ago, right? So if you think about extreme weakness on any given one day, this kind of thing, typically the precondition for that is one of two things, and it's the exact opposite. Extreme weakness comes from something that's been really bad in an established downtrend, and then has a collapsing type day, meaning a sick asset that has yet further dropping and collapsing, or it comes from the condition that is happening today, something that's been very, very strong, crowded, complacent, and then out of nowhere you get a drop. So that is, of course, the circumstance. You use the word crowded or complacent. And so the question is, and this is unknowable, right? I mean, let me just say something. I think I'm as qualified as the planet to determine whether tomorrow is up or down in these stocks, and I have no clue. Okay, so let's get that out there. It's usually right to resist the temptation to buy into a drop in gap. There's an expression called let the dust settle. And so it's tempting to do it. But usually it's wrong. Let a few days pass. And some people, I know you like to refer to a 3-day rule or 10-day rule. I'm not sure there's a fixed rule, but the concept of let the dust settle, jumping in just because something's down, usually is a bit impetuous.
So you don't think it's a buying opportunity if you go by your rules just yet, but maybe it could be in NVIDIA?
So just to elaborate on that. So it's not really, it doesn't have to be a 3-day rule, but it could be when it stops going down. Right, so when you make a higher low in a consecutive day, then you buy it and use that day's low as your exit if it breaks down again. But a couple things that you mentioned, is it good or bad? I think it's kind of good for some software companies, right? Because if the input cost is going to be AI, then shouldn't that in theory be better for your bottom line? The problem is the cat's out of the bag. So if you bar its use in the U.S., we already know that they can do it cheaper. So how much money have these top mega cap names spent and wasted? And going forward, they can't recapture that money. But to Tim's point, I think CapEx is still there. And to Dee's point, will Meta still spend the same amount of billions? Probably. Will they buy a ton more, or will they go a different direction? I think the competitive nature that you noted in the beginning of the show, I think is healthy for the markets. The problem is the placement of it. So was it Stargate? Was it TikTok? When Gina Raimondo was in China, they unveiled the Huawei phone, right? So there's a lot of stuff with the friction between China and the United States that they want to show, hey, we have this up on you. We can still do this better than you. So there's a lot of infighting. But what we haven't talked about is, does Trump, where he started with tariffs, forgot about the tariffs, do those come back in now, where now you get the markets focused on something else? So it's the shell game of the market. Let the dust settle. I made a purchase today. I think that things got overdone.
So again, I think I would, and you asked about NVIDIA, and I didn't, I think you gave you an answer to that. I mean, there are two ways to interpret it. Is something that's up 300% and 400% entitled to pull back 15 or 20? Not to personify the stock, but that's the expression. And the answer is yes. The question is it weakness to take advantage of or weakness to stay away from, right? And there are two types. My hunch is that the downside is to 100 in NVIDIA, and so that's, if it goes there, that's another 17, 18%. But right now, the stock is where it was in June. So it can't be considered extended, right? Up and up and up and full. It hasn't made any price change since June. We're now January. And so support does come into play at some point. And at some point, people will step in and buy, and some will be doing it right now in the aftermarket and tomorrow pre-market. I think downside's to 100. And again, I would apply that rule. Just stand aside, nothing to be lost by postponing all new buying in a name like NVIDIA until it just starts to go down. Let's wait.
How many people said at 140 in NVIDIA, if I could get it at 100, I'd go all in again? And then you're going to get tested because as it falls, to Carter's point, is it something you want to buy? Is that weakness ongoing now? When you really get your feet to the flame?
Well, and one of the stories around NVIDIA that we've been talking about for months is at what point are the hyperscalers, who are the biggest customers, going to begin to be competitors? And are going, oh, congratulations, some confetti just fell. And to what extent that's right. I mean, there's going to be already competition within the ranks, and that there will be more efficient models coming through. And again, I think this puts a focus on ROI, and this puts a focus not only on ROI in terms of the companies that actually are developing models and where they're actually monetizing, but also in terms of which companies really are actually monetizing AI now. And if you look at the broader implications for the market, in today's market reaction, and if you look at the indices, we know why the Dow outperformed, because the Dow's a very different group of companies. There's really nothing to say that suddenly that the industrial world or some of these older, more traditional companies are now going to benefit. But I would say there's no question that what you have done on the other side of this, if you are significantly cheapening the costs to broaden AI and raise the game and bring the game in that much faster to that many more companies, it is very positive. And it's very positive more broadly, possibly, for the multiples and the margins the market trades at.
There's so many threads to pull on here, but I do want to take a look and turn to our friend Mike, because options traders are also betting that a full U.S. tech meltdown is unlikely. Mike Coe joins us here with a little options action. What do you have for us, Mike?
Yeah, well, I mean, it's probably not that surprising that NVIDIA was the busiest single stock option today, net of that huge decline. First of all, it was always going to be one of the top three on any given day, but today's big move prompted a lot more flow into it. What was interesting is that calls still did manage to outpace puts. And actually, rather than reaching out and grabbing the falling knife, which is, how we refer to that sometimes, and waiting for the dust to settle, as Carter was just saying, where people are making their bullish bets was in short-dated upside calls. So, for example, the most active contract were the weekly 130 strike calls. Buyers were paying about $1.80, a little bit more than that. Almost a couple 100,000 of those things were trading. And so that was a way for people to risk, a little over 1% of the stock price betting on a rebound. I don't know that that's all that likely, because I think the dust probably will settle for a few more days. But I think this is probably the point that Tim was trying to make. I think if AI is going to be so much more accessible and so much less expensive, we can think about that as a meaningful productivity and a more democratized productivity boost for businesses more generally. And if you take a look at all of the S&P 500 stocks today, 2/3 of them were actually higher.
Yeah, that is obviously very interesting. And I'm also wondering, does this just give any of us the incentive maybe to just broaden out a little bit, right? I mean, look at all the eggs we have in this basket. I think Vetify had 469 ETFs have NVIDIA among the top 15 holdings. So even if you think that you're not an NVIDIA holder, you hold it in some way. And maybe that makes you want to diversify that portfolio a little bit, even though, as Carter put it, nice perspective, we are back to where we were in June.
Yeah, in fact, if you look at semis relative to the market, I mean, they're back to where they were in February of last year. So I mean, yeah, there's no question that this trade and the excitement around this trade has been kind of dead for a while. And in fact, the market looking for leadership from both the mega cap techs, the triple Qs to the S&P, or the semis to the Qs, have been lacking for that for a long time. I think, Carter, since when? July? I mean, is that really? Yeah. So,
I mean, and that's the stunning thing, because you only by looking at a ratio chart or relative trade, you see, wow, this has felt good, but actually it's negative alpha. That is the case.
Yeah, and I think we're, again, look, when I woke up and read these headlines and then quickly checked my screens and heard from some of the smartest analysts on the street, the sentiment was pretty skeptical. Skeptical that, hey, how could Google and Microsoft, how could these companies not have heard anything about this? How could we just have gotten some insight? And yeah, I mean, ultimately, this is 4 or 5 days within the announcement of Stargate. This is a concept that I think a lot of people felt that we won't really ever know the costs attached to this. And hey, by the way, do you really want DeepSeek as your backbone when they potentially can back up to your infrastructure and your entire Gmail account, or all the things that we already were concerned about? So, there's again, it's layered on top of the geopolitics that were already ripe and red hot in the middle of tariff season. And by the way, this has implications for our Fed conversation, because there's no question.
I was going to say, there's so many different webs we can weave here, but I do want to move on to our guest, because we have a noted hedge fund manager who started worrying about DeepSeek around Christmas time. So let's bring in Dan Niles of Niles Investment Management. He was a semiconductor and computer hardware analyst. So again, tying everything together during the .com bubble. I know, Dan, obviously this is something that you brought up as a concern. So when you started to hear the news, it probably didn't feel as shocking to you as it did maybe to some of the rest of us. But how are you thinking through the action that you saw today, and what you think we should be aware of as investors and traders moving forward this week?
Well, I think it's more than just this week. So I've been talking about the fact that I expect an AI digestion phase in 2025 since probably mid-year. And there have been a lot of data points along that way, where if you think about it, Microsoft, which has the 49% economic interest in OpenAI, when they reported their June quarter, they guided revenues below the street for the September quarter. Then they reported the September quarter, they guided revenues below the street for the December quarter. And then when Microsoft's CEO was asked in December, are you supply constrained? He said, well, I'm power constrained, but I'm not chip supply constrained. So, and then you had Ilya Sutskever, founder of OpenAI, saying back in November, I think, that we've already trained on all the data on the internet. So training scaling is basically dead. So you've had a lot of data points leading up to this point. And when I initially saw the DeepSeek data it was released on Christmas Day, I was like, yeah, there's no way they trained on it for that little. And then as I talked to contacts in Silicon Valley, because don't forget, this came out on Christmas Day, right? Everybody's on vacation, we're all enjoying New Year's, et cetera. It became increasingly clear that they had made some fundamental improvements in the way to approach this, whether it's distillation or mixture of experts, partial activation, or I'm not going to get into all the technical stuff, but bottom line, they did make some big software improvements. And from what I heard, everybody, because it's open sourced, was looking at it saying, hey, how can we incorporate some of this into our models? Because don't forget, it's not like OpenAI came out of not having the benefit of Google, which you could argue invented transformers or did a lot of the early work. They just didn't commercialize it, which OpenAI did. So all of this stuff builds one on top of the other. And what it gets down to is, I don't think there's any chance that NVIDIA, and I've said this before, does revenues up 50% this year, because whether it's Microsoft cutting back on CapEx, because don't forget, they said they're going to spend $80 billion this fiscal year. Well, if you do the math, they spent $20 billion in September. They said that's up in December. Their fiscal year ends in June, which means the first half of 2025, CapEx spending is down from the back half of 2024, and it's been growing at 70 to 80% for a year and a half. That's a very big change when the largest spender on AI is going from growing 70 to 80% to not growing at all.
So I understand that you don't believe in NVIDIA necessarily, or at least you don't believe that the revenue growth they'll have is what they've said they will have. What about some other names? Names like Meta, for instance, which was up today with all of this. I understand that's a name that you like. What are you thinking about that name and how this plays out?
Yeah, and to be clear, NVIDIA's never guided for this year. They only guide 1 quarter in advance, but that's what the analysts have out there, and I just don't think those numbers are achievable. But you're correct. The thing you should look at, and I talked about this on Friday in something I posted, which is, look, you have to look at the stuff this benefits, because when you lower hardware costs, it really helps with the software that's sitting on top of it. And also guys that use AI. So Meta uses AI to figure out, hey, this is the video that Courtney would like to watch, and oh, these are the ads she's willing to engage with, and they use AI to help with that, which is why their numbers went up so much last year. And so that's one of the names that I think will benefit. And funnily enough, a name like, you look at the software names, they're also going to benefit a lot. And so those are areas that we've been swapping into in terms of our likes versus dislikes. And if you further back to the internet bubble, originally you had all the hardware stuff take it up. So, Cisco, Ciena, et cetera. And then you went through this 78% crushing in the NASDAQ. And what were the biggest companies that came out of that? Well, the ones that used all those lower hardware costs, like an Amazon, for example. And so I think you're going to see the same thing play out over a number of years. And by the way, I think NVIDIA, revenues will grow. It's just going to grow slower than a lot of people anticipate. But I think the value is really going to be in the software guys that go, okay, these are the changes I can make. And how can I ride on all of this investment that's happened underneath it? Much like dark fiber did not turn out to be what everybody thought back in the internet bubble. And you went through a crushing, but that crushing was great because all the guys that built on top of all that dark fiber overspend did very, very well.
Got it. That all makes sense. And yeah, that AI for the Facebook and the platform's really working because I'm seeing an awful lot of Buckeye Championship videos, and I like it. Dan Niles, thank you so much. Well, for more on DeepSeek and how that could impact the future of AI, let's head to the iConnections Global Alts Conference in Miami, where the captain of the Fast Money ship, Melissa Lee, she joins us with Sunny Madrash, the COO and president of AI company. Gosh, how many times am I going to say that today? Grok, Mel, take it away.
Thank you so much, Courtney. Great to see you and great to have you here, Sunny, on a day like today. You were saying that you thought the market reaction was overdone to the news. Why is that?
Well, just so the magnitude, really, if we think about what's happened, we now have a world-class open source model that is low cost, easy to deploy, and will probably be deployed in many different places. So you would think that the market would be excited there'd be more use of AI. And if there'd be, some amount of movement downwards, it wouldn't have been to the magnitude that we saw today with NVIDIA.
Right. I mean, in terms of broader adoption, the thesis, though, is that it's going to force deflationary pricing within AI, and so that will force more broad sort of adoption by companies, by consumers, et cetera. The timeline is just sped up by what times at this point?
I feel like we've had an 18-month jump happen, where all of a sudden now it's easier for companies to deploy. If you think about this model, it can be deployed by Apple if they want to on the kind of technology that they have. And so we're going to see a lot more deployment happen, that was going to probably happen 18 months from now, happen right now.
Okay. So in terms of who will deploy, it'll be businesses. I mean, that's where you're sort of looking for the next wave. So when we were looking at, the AI trade, thinking, oh, these companies need to prove sort of a return on investment. We need to see businesses adopt it and show that they are saving money by doing so. We will see that theoretically in a shorter time frame, which is exactly what the AI trade wanted to see.
Yes, yeah, and exactly that, right? Everyone's been concerned, one, with lock-in. Now you have open source, which enterprises and researchers and business startups love, and two, a lower cost of running it.
Right. What are you looking for in terms of the next steps here? How do you think the community is responding? I would think that Meta, with its open source Llama, could be the primary beneficiary immediately from this DeepSeek being released.
Yeah, I do think they're probably one of the top groups. Their researchers are probably looking at what the DeepSeek team did. They published the research, the model's made available, the code is available, the weights are available, so people are looking at that. I also think smaller teams are going to be empowered in the U.S. and other places to go and build, because they now know what's possible within a much more constrained budget.
Right. What does it do for a company like yours, which is AI inferencing technology, lower cost, lower efficiency, which is really what DeepSeek is sort of promoting at this point? You had a recent fundraise, which put you at a $2.8 billion valuation, I think, last summer.
Yeah.
Now what?
Well, look, we've been saying, and our founder, Jonathan, was the creator of the TPU, and so he's been thinking about inference for a long time. And these models, these reasoning models, consume a lot more tokens and produce a lot more tokens. So for us, this is really excellent. And we think as the world is going to need to consume more tokens, NVIDIA can't even supply enough chips to everyone. So it gives opportunities for us to sell into the market, even more aggressively.
There's been a lot of talk about this the whole day within the tech community. I'm wondering, what is sort of the most off-base take on this whole DeepSeek situation? Everybody's got a take.
Yeah.
What is the most off-base take that you've heard?
Well, I think the biggest one was the speculation that some chips were smuggled into the country, and NVIDIA came out with a post themselves saying that, no, these were chips that were sold, they're H800s, which are allowed under export control. So I think that was the biggest one, that 50,000 chips were smuggled into the country.
What do you think is a takeaway here for the United States? And I'm not asking you to play politician or anything like that in terms of export bans. Obviously, that did not stop, because we were also talking prior to this interview about all the other releases coming from China when it comes to sort of this general AI industry, competitors to DALL-E and photo imaging, et cetera. What does this show us?
It shows us that the best minds and technology can't be constrained. And really, this should be kind of viewed, and I think Mark Andreessen had this post, a Sputnik moment. And hopefully we together as Americans come together and basically really push ourselves over the next 5 years to be the #1 leader and not try to do that through regulation.
I think Mark also said this is a great gift to humanity. Do you agree?
Definitely.
Because the stock market is looking at it and just selling off the names that were associated with the AI trade, not looking at sort of the bigger picture.
Yeah, I think what this really unlocks is the ability for more people to do interesting research, not just chatbots, but what we were hearing about even during the Stargate announcement, like the biology work, the science work, the research in math and physics. I think we see a lot more happen there because we have the ability to run these models, and researchers can run these models without having to have bigger and bigger clusters to do that.
Does this also pull forward the peak in AI spend, in your view?
I mean,
it's pulling forward everything, so by logic, it should pull forward the peak also in spending.
100%. Jensen, he was on the BG2 pod a couple months ago, and he had this comment. He said inferencing is going to be 1 billion times bigger than training, and I think that's just been pulled in. So I think it's going to be an acceleration of spend.
All right, Sonny, great to get your take. Thanks so much.
No, thanks for having me.
Sonny Madra. And do not miss, of course, a special Fast Money Live in Miami that starts tomorrow and Wednesday. Altimeter Capital CEO Brad Gerstner will join the gang down here to break down what he is seeing in tech, AI, and much more. That all starts tomorrow, 5 p.m. Eastern Time, right here on CNBC. Court, see you then.
Thank you so much, Melissa. We will be watching. It looks so nice to be down there outside. Melissa and Sonny, thanks so much to you. Well, coming up, much more on today's big tech sell-off, including how DeepSeek is impacting the utility trade and how the Fed is interpreting all the market moves. We'll tease that a little bit. But first, a couple names making headlines today. The activist push on U.S. steel and how AT&T managed to buck the trend to hit nearly 4-year highs. Don't go anywhere. Fast Money, back in 2.
Options Action is sponsored by Tasty Trade. Stocks, options, futures, more. Trade your way.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
The booking app I used didn't have Agent Force, so an AI agent didn't know to move my reservations inside or know what I like to eat, which is not that.
What's up, my brother?
Oh, hey, bud!
We really needed this rain, right?
Agent Force helps restaurants prevent dining disasters.
Paddle on over.
It's what AI was meant to be.
We got you, brother.
Most people don't realize how processed typical dog food is. At the Farmer's Dog, we believe dogs should be able to get their daily nutrition without the excess processing.
No application fee if you apply by February 12th at University of Maryland Global Campus, offering online and hybrid courses and lifetime career services. Learn about our more than 135 degrees and certificates at umgc.edu.
Inside Wealth, an exclusive newsletter for a select audience. Inside family offices, how the wealthy become ultra wealthy. Robert Frank's high net worth perspective. Join the list at cnbc.com/inside wealth.
You've got a glow about you, inside and out. Show it to the world with just 10 minutes of self-care. Meet Omnilux Contour, an LED light therapy mask clinically proven to reduce fine lines and wrinkles. Find out how you can improve your skin at OmniluxLED.com.
All right, team, saddle up. I want Q1 full index reports on my desk by noon.
Are you getting any of this?
Yeah, Otter's got the meeting notes. I'll ask it for action items in the channel. And Maria already asked for a budget reminder. Smart.
Got it?
Got it, boss. Otter, you got this.
Is Cialis Daily better than Viagra? Does it last longer than Viagra? Are sample packs available? Get started with a 30-day sample pack. Generics now only $1 per tablet at rexmd.com/30.
Welcome back to Fast Money. U.S. Steel shares down more than 1% as activist investor Ancora makes a push for new leadership at the company and says it should pull out of its deal to be acquired by Nippon Steel. Ancora reporting that it holds a 0.18% stake in U.S. Steel. Steve, you've made some moves here. Explain to us why you think U.S. Steel could be a winner.
Well, I think in any case scenario, Trump saying no to the deal, Biden saying no to the deal, they had to make sure that the
Nippon Steel deal.
The Nippon Steel deal, they had to make sure that they were either going to be okay with tariffs, tax incentives, or another buyer. So we saw Cleveland Cliffs, we saw Nucor thinking about a bid, rumored to have a bid. Is it going to be the Nippon deal in the 50s? Probably not. Will it be the high 30s? In steel, that's probably a little bit too low. Price targets across the street are probably 20% higher, at least higher from where they are right now. And when you're talking about this new CEO coming in, I'm a little confused. Ancora is looking to get that breakup fee. I'm not sure who would pay the breakup fee if it wasn't the fault of Nippon for breaking up. So it would be the United States that was really at fault. I think either way, if you look at consolidation in the space and trying to save the steel companies that have had a lot of heavy headwinds, I think the stock goes much higher.
All right, Mike Coe, what's your take on this one?
Well, yeah, I mean, Cleveland Cliffs had made a bid for the company at around the same time that Nippon Steel did, and they came in only just slightly light. I think it was $54 versus 55, something like that. So, clearly, and they probably should have gone for that, since as a domestic acquirer, although it wasn't an all-cash deal, that would have been more palatable to regulators here. But I'm with Steve. I mean, I think there is some meaningful potential upside. I mean, we just have sort of the proper backdrop from it politically. And, this thing has pulled back somewhat considerably. I like having an activist in there. And I can understand why they have a little bit of questions for the CEO not taking a domestic bid.
Interesting stuff, a lot of movement, and there is a lot more Fast Money here still to come. Here's what we have coming up next.
Earnings season in full swing, with two names kicking off the week with some major moves before the bell. The numbers that had SoFi sinking and AT&T surging. And another Fed decision on deck, as President Trump is already sounding off about interest rates. What we can expect to hear from the central bank on where it's going in the months ahead. You're watching Fast Money, live from the NASDAQ market site in Times Square. We're back right after this.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
At Morgan Stanley, old school hard work meets bold new thinking. Partnering to unlock new ideas, to create new legacies, to transform a company, industry, economy, generation. Because grit and vision, working in lockstep, puts you on the path to your full potential. Old school grit, new world ideas. Morgan Stanley.
At State Street, we know everyone's trying to get somewhere. Take the next step toward your future by investing in the S&P 500 with SPY. Getting there starts here.
What if you could tackle your dog's itching, soft stools, and low energy? Millions of pet parents are raving about Dr. Marty Nature's Blend.
Such a huge difference in her health. More energy, more playful, no more pooping issues.
I'm Dr. Marty. I've been a veterinarian for more than 50 years. The dangerous ingredients added to many pet foods could be impacting your dog's lifespan. That's why I formulated Nature's Blend.
Now you can feed your dog wholesome cuts of real meat, vegetables, and fruit with no artificial preservatives or fillers. Try Dr. Marty risk-free. Go to drmartypets.com/TV.
I wonder if this golf cart has hands-free driving. It didn't, but my Skechers slip-ins are completely hands-free. I just step in and they're on.
Only the ServiceNow platform connects every corner of your business, putting AI to work for people.
HR?
Yeah.
IT?
Yeah.
R&D?
Yep.
OMG?
Oh, I see. Yeah.
That's the department I work in.
All right, enough of that.
A new administration, new Fed strategies. Could the Trump agenda impact inflation? And the Fed's next move? Fed Chair Powell's crucial remarks and message to investors. Power Lunch, Wednesday, 2 Eastern, CNBC.
It all started with a small business idea.
It's a pillow with a speaker in it. That's right, Craig.
Pulling in the perfect team to get the job done.
I'm just here for the internet. AT&T, it's super fast.
You locked us out?
And when we were thrown a curveball, we had everything we needed.
Is the internet out? Don't worry, we have AT&T internet backup.
The next level network for small business.
I sold a pillow.
Hey, I got her a little something.
A little something, Dad?
Oh, hi. Walt rolled his 401k accounts into an Empower IRA, and it's grown nicely. So I say, let a Gramps be a Gramps.
Okay, just promise me it doesn't make a lot of noise.
Go, baby, go!
Thanks, Grandpa!
Get good at money so you can be a little bad. Empower.
Some people thrive on the edge. We are improving lives by bringing intelligence to the edge. Blaze Edge AI technology, processing critical data with blazing speed, bringing the most sophisticated AI intelligence to computation at the edge. Distinctive efficiency, limitless innovation. Make smart decisions with precision and agility. Now publicly available. Trade today. Blaze. Life on the edge.
For me, Squawk Box is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you might get some useful information.
Squawk Box, weekday mornings, 6 a.m. Eastern, CNBC.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
I was skeptical, so I did some research and called Coventry Direct. They explained life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-514-7800. Coventry Direct, redefining insurance.
We'll go back to Fast Money. We are counting down to the first Fed meeting of the year. The central bank widely expected to hold rates steady on Wednesday. For more on what we can expect, Ben Emmons of Fed Watch Advisors joins us on set. Ben, any chance the Fed doesn't hold? Is it all in what Powell has to say?
It is all what he's going to say. But, market pricing at near 100% of on hold. First time since the fall of 2023, we had rates a little higher than we are today. So if he is a little bit dovish, even if it's like a tinge of it, it would be kind of a shock, right? So now would he? I think what we have to take note of is Waller, Chris Waller, who I think was really deviating from the cautious tone that we got out of the Fed over the last several weeks, looking at the data and saying we got to keep our eyes on the inflation ball and really pay attention to that. And he came from a completely different angle. Powell has always been a little bit with him in that sense of like looking at inflation slowly declining and having confidence and feeling like this is going to continue no matter what's going on in the economy. So he will point to that. Now, I don't think he will be politically influenced, like maybe tweets will go around and he will maybe pay attention or not. I do think, though, that he knows about the administration, what they're planning to do. So they will probably have talked about Colombia and what happened with this and how markets have reacted. And there's probably a little bit of discussion in the Fed, too. You're going to have to play into this now because this is a new reality.
That was exactly what I was going to say. It's the first Fed meeting since Trump has officially been the president. And obviously Powell does not want to be and says he is not influenced by politics. But we know if tariffs come into place, then that does really change the game from the economic landscape. I mean, what should Powell say right now when they're kind of being used as threats, as negotiating tactics? Does Powell even dip his toe in that water at this point?
Not exactly that water, but what he will do is that he will take note of what they put as forecasts out in December, where there was a surprise to markets. When they raised the forecast and sort of signaled like, we're getting ready for these tariffs. They're going to impact PCE. That was the message I think a lot of people got from that. And so now we're here and we're seeing the first sort of stage of it. They're going to have to think about like, what's our policy look like from here? They will keep cuts on the table. I don't think that's off the table. I don't think they will hike near term either. So they're sort of like stuck with the data that's strong, but they are dealing with the uncertainty of this trade policy, because this example of we're going to put tariffs onto Colombia and then we'll just take them off right away, it just causes uncertainty. So I think the Fed will have to play into that, meaning they're going to keep the cut on the table. I think that's their way of dealing with that uncertainty.
So that sounds to me like almost the opposite of a hawkish cut. That sounds like a dovish hold, which I guess isn't the opposite because there's no action. But I think you're pointing out that this is a consequential hold. And if I hear you right, I think I hear you say that Waller is kind of really the Fed whisperer, that maybe he's out there doing a little bit of the lifting in terms of the messaging for Powell. But it sounds to me like there's nowhere else to go but to be dovish here and to kind of come back in off of what was obviously, look, that was a very hawkish cut last month. And it was a case where markets, which were very offsides going into that CPI, tells me there's a trading range here in treasuries.
Yeah, I agree, Tim. I think that we're sort of at the low end of the range currently here at 4.5-ish. You may dip a little bit below that, but then the upside is really 480 to 5. I think that stays in place exactly for that reason. You have to actually sound dovish, like sort of leaning against this uncertainty of the tariffs, because we don't know how it exactly impacts the economy. It could push up inflation, but it could also cause unemployment because people get uncertain, don't know what to do, or don't know how to respond to what does it all mean for my consumer products that I buy every day. And so it is a dovish hold, but I don't think they're at the point that they can accelerate rate cuts. I don't think they're there. So what Waller did was sort of having, we won the battle on inflation, we can keep lowering rates, but that's not an accelerating rate cut cycle. So that's the hold I think we're at. Yeah.
Words will matter once again. Ben Emmons, thank you so much for being here with us. Carter, I want to get your reaction.
Well, I'm not going to be a broken record on this one, but I mean, and Ben referred to this, that the yield on 10-year treasuries, the cost of 10-year money, was 4.35 at the end of Q3 2022. We are now into Q1 of 2025. It just hasn't gone higher. And so the question really is here at 4.5%. Is the next 100 basis points 5.5 or is it 3.5? I'm in the lower camp.
Or is it 100 basis points?
Or is it just stay here and it becomes this non-event that keeps on being a non-event? Because again, if the cost of 10-year money is 4.5%, that is not high. That is good money, cheap money, and it just hasn't gone higher. Every time we pump up a little bit, we're going to 6, we're going to 7. It's never happened. The real interesting thing, of course, is that gold continues to behave so well. Beat the S&P last year, has doubled the performance of the S&P year to date, and I think that's the way to play a lot of this.
And Powell has said that monetary policy is restrictive right now, and they are data dependent. So it's kind of hard to forecast, let's figure out what tariffs, we heard from the last time, 20% of Fed governors were factoring in tariffs. 20% weren't factoring in. The rest were just trying to figure out which way the wind was blowing.
Exactly. Well, we'll wait and see, I guess. Coming up, power stocks plunging as DeepSeek sparks concerns over the demand for energy. Why the new China AI model is putting question marks on what kind of juice artificial intelligence actually needs. We're back in 2.
When you sell with The RealReal, we handle photography, pricing, shipping, customer service, and so much more. Resale is what we do, so you have time to do you. First-time consignors get $100 extra. Terms apply.
Your cardiovascular health impacts everything, and we mean everything. Blood pressure, circulation, and energy production for starters. So here's a radical new approach to cardiovascular health support. From the brand with more 5-star ratings at Walmart than any other beet brand, it's Super Beets by Human, the #1 cardiologist-recommended beet brand. Discover how Super Beets cardio-powered ingredients support so much more than heart health. And for a limited time, get a free month supply on all bundles at superbeets.com.
16 million Americans suffer from chronic back pain, the 6th most costly health condition in the U.S. Meet Creative Medical Technology, stock symbol CELZ on the NASDAQ. Creators of Stem Spine, a regenerative medicine using stem cells to help fix the multi-billion-dollar chronic back pain problem. Stem Spine was shown to be 87% effective at improving mobility and reducing chronic back pain, and that could be worth a fortune. Creative Medical Technology, stock symbol CELZ.
We need a small business loan fast.
I got this.
Loan cannon!
There's a better way to get a fast small business loan. Go to OnDeck.com, and if approved, get your funds as soon as the same day. Your loan is on deck.
Au revoir, mon amour. Au bientôt.
Let's work on that French, shall we?
Au revoir, mon amour. Au bientôt. Au revoir, mon amour. A bientôt.
At Ameriprise Financial, we know our clients are so much more than clients. They're go-getters and game changers, legacy leavers and visionaries, healers and confidants. The goals that matter most to you matter most to us. Helping you achieve them is what we do best. With personal financial advice from an advisor you can trust and goal-based investing in solutions, it's no wonder we have a 4.9 out of 5 client satisfaction rating. Ameriprise Financial, advice worth talking about.
Hindsight may be 2020, but what investors need today is 2020 foresight. VectorVest has it.
I'd be trading blind if it wasn't for VectorVest. The best stock site, period.
Test drive VectorVest today for only 99 cents.
Experience the power of CNBC Pro. All new investing tools securely linked to your brokerage accounts. Become a smarter investor with the power of CNBC Pro. Go to cnbc.com/getpro now.
Welcome back to Fast Money. Nuclear power stocks plunging today on new questions surrounding AI energy needs in the U.S. Vistra, Talon Energy, GE Vernova, Constellation Energy, all tumbling more than 20% today. CNBC's Pippa Stevens has the details for us. Pippa, what a day.
Yeah, Courtney, well, so much of the momentum behind nuclear and power stocks has been Gen AI and forecasts that will need an ever greater amount of power for data centers, which is why DeepSeek's promise of a more efficient model is hammering these stocks. Nuclear owner Vistra was the biggest loser in the S&P today, wiping out more than a quarter of its value, with Constellation and Talon both down more than 20%. Now, Evercore ISI said that the magnitude of the decline means that any uplift from data center load growth has now effectively been wiped out. The selling also extended to small modular reactor names like NuScale and Oklo. Still, Arthur Hyde from Segra Capital said that DeepSeek doesn't really change much for nuclear over time, but that some of the independent power producers and small modular reactor names were crowded. The upstream players also dropping, with the URA, URNM, and NUKZ all down double digits, with Cameco, a major miner, dropping 15%. Still, Courtney, it is important to note that while AI is one theme driving power stocks, it is not the only one. Reshoring and electrification are also raising power demand. Court?
Yeah, this was a really, really interesting space today. Pippa, thank you so much for running us through it. I mean, Mike, Pippa makes a good point. I mean, maybe in the long run, you don't need... we still need energy. It's not like we don't need energy. Maybe we just don't need as much. It's not as concentrated right now. I mean, how do you trade it, Mike?
Yeah, I mean, there's obviously some cross currents here. So, you know, a big part of the nuclear thesis was based on these very high demand numbers. And what was interesting to me was that where the nuclear producers and the miners like Cameco and URA traded down, which, by the way, I should mention that options traders actually were taking this as a buying opportunity and buying a lot of calls and all of those. But if you actually take a look at the natural gas space, so short-term natural gas sold off, and that's because of weather issues. People are saying, oh, it's getting a little bit warmer, so near-term natural gas demand went down. But longer-term natural gas demand over the course, week on week, actually went up. And you take a look at NextEra Energy, which is actually a natural gas generation player, they actually were trading higher today. So natural gas spools a whole lot more easily. You can fire up new generation on the natural gas side. So basically, I think that you could probably sort of put a little bit of a energy barbell trade on here, buy a little bit of calls on both long-term natural gas and on some of the uranium miners.
Very interesting stuff. We have just talked. We're running out of time. Don't miss fast coverage from the iConnections Global Alt Conference that's starting tomorrow. We'll be speaking with Morgan Stanley's Mike Wilson, Altimeter Capital's Brett Gershner, original Big Short traders Porter Collins and Vincent Daniel, and many, many more. It all starts Tuesday at 5 p.m. Eastern, only on CNBC. We do still have more Fast Money, though, back in 2.
When the temperature drops, you've got two choices. Close your eyes and think warm thoughts, or open your eyes and get out here. There's only one vehicle lineup that embraces everything the cold has to offer. The official vehicles of winter. Jeep, there's only one.
Right now during the Jeep Start Something New sales event, get $3,500 total bonus cash allowance on most 2024 Jeep Wrangler gas-powered models. Hurry in today.
Ready for the big meeting?
I have to write this project plan.
I just need to reply to 40 emails.
Every day, your team gets sucked into endless writing tasks. And every day, hours disappear for everyone, except Pam. Hey, Pam. Because Pam uses Grammarly's AI to write in a few clicks, not a few hours. It's one seamless experience everywhere. And it works for the whole enterprise. That's why 70,000 teams trust Grammarly.
I was lost in the dark.
Grammarly for Business. Enterprise-ready AI.
Create tomorrow. Start today. With new investment products backed by superior risk management. Asset management in a time of disruptive change. Financial well-being accessible to all. Calabas. Today for tomorrow.
To date, recommending Netflix has been the right call every step of the way, even when its stock looked expensive in the past. Now, I've been pounding the table on this one for ages, and I'm certainly not going to stop now.
Mad Money, next, CNBC.
HERS can help you achieve your weight loss goals through a range of treatments, including GLP-1 injections, plus support for nutrition, hydration, sleep, and movement. GLP-1 starting at $165 per month. Get started today at forhers.com.
Hi, I'm Cade Courtley, and welcome to the Ford Patriots Buy One, Get One Solar Generator event. Claim the Patriot Power Generator 2000X, and you'll get a free Patriot Power Sidekick with 2 free solar panels. These are 2 of Ford Patriot's silent, fume-free solar generators that can power your fridge, TV, and critical devices without ever needing gas. Every American should have the peace of mind that comes from having backup power. Visit FordPatriots.com to secure your free generator and solar panels now.
Meet Omnilux Contour, an LED light therapy mask clinically proven to reduce fine lines and wrinkles. Find out how you can improve your skin at OmniluxLED.com.
got breaking news on the Senate vote on the Treasury Secretary nominee, Scott Bessent. Eamon Javers has the details. Eamon, what do you have?
Hey there, Courtney. Take a live look now at the Senate floor where Scott Bessent does now have the votes to be confirmed as Treasury Secretary in the Trump administration. Scott Bessent, of course, a former Soros Fund Management partner, founder of Key Square Group, a Yale veteran, and now he will be Secretary of Treasury in Donald Trump's administration. This is something that Bessent campaigned for in Mar-a-Lago in November and December, narrowly won the job, although there were some doubts at the last minute whether he would get the nod from Donald Trump or not. He did get the nod. He now has the votes, and he will be the next Treasury Secretary. Courtney, back over to you.
Thank you very much. Eamon Javers in Washington. Up next, your final trades.
To date, recommending Netflix has been the right call every step of the way, even when its stock looked expensive in the past. Now, I've been pounding the table on this one for ages, and I'm certainly not going to stop now.
Mad Money, next, CNBC.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
Individually, each of us is great. But from here, you can see we're one big team. At Atlassian, we believe real progress takes all of us, working together on new sources of energy. Cars that drive to the future. Even pizza deliveries. Together, we can go beyond where we've ever been, collaborating from anywhere on everything. Atlassian makes software for teams to do what is impossible alone.
What if you could put aside your doubts and look to retirement with excitement? At Bright House Financial, we specialize in annuities and life insurance that help protect what you've earned and ensure it lasts. Bright House Financial, build for what's ahead.
Car, this isn't the way home.
That's right, James. It isn't.
Car, where are we going?
We're here.
The future isn't scary. Not investing in it is.
Car, were you in on this? Nothing gets by you, James.
NASDAQ 100 Innovators, one ETF. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
16 million Americans suffer from chronic back pain, the sixth most costly health condition in the U.S. Meet Creative Medical Technology, stock symbol CELZ on the NASDAQ. Creators of StemSpine, a regenerative medicine using stem cells to help fix the multi-billion-dollar chronic back pain problem. StemSpine was shown to be 87% effective at improving mobility and reducing chronic back pain, and that could be worth a fortune. Creative Medical Technology, stock symbol CELZ.
At University of Maryland Global Campus, getting a bachelor's degree doesn't have to mean starting from scratch. Here, you can earn up to 90 undergraduate credits for relevant experience. What will your next success be?
For the fourth consecutive year, Interactive Brokers is one of the fastest growing prime brokers and is now number 5 in Preqin's ranking of top prime brokers. Interactive Brokers serves both organizations and individual investors. To get better results, get a better platform. The best informed investors choose Interactive Brokers.
Final Trade is sponsored by Interactive Brokers. The best informed investors choose Interactive Brokers.
It's time for the final trade. Let's go around the horn. Mike.
Next Era Energy, ticker NEE.
Tim.
You're buying weakness in nuclear and energy. CCJ.
Carter.
Pure Cycle, a stock that's on 40% due for a big bounce.
And Steve.
Arista Networks, overdone.
Thank you for watching Fast Money. Mad Money starts right now.
My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm
I'm Kramer. Welcome to Mad Money. Welcome to Kramer. I hope you my friends. I'm just trying to save a little money. My job's not just to entertain, but to educate, to teach them. So call me, 1-800-743-CNBC, or tweet me, Jim Kramer. What do you do when you don't know what to do? How about nothing? I mean, that's how I felt today when the world of artificial intelligence was upended by a Chinese company that claims to have a solution to the colossal toll that NVIDIA exacts on anyone who wants a piece of the AI action. The Chinese outfit, DeepSeek, apparently has figured out a way to get much more of each NVIDIA chip, get much more out of them, much more than anyone thought possible. And that news crushed the NASDAQ, which plunged 3.07%. Dow advanced 2.89%. S&P lost 1.46%. Now, we really don't know how DeepSeek did it. We do know that many big companies have ordered a huge amount of chips from NVIDIA, and there could be some serious buyer's remorse now. Maybe all of the spending going to NVIDIA was needless overpay. Maybe the gigantic number of data centers that are being built, huge driver of growth in our country, simply aren't needed. Maybe all the cooling process expenses are a big mistake. Maybe the rush to reopen old nuclear plants and put up more renewable generation and even bring back coal, totally unnecessary. Today, the air went out of every one of these balloons. NVIDIA's decline was the biggest shock, with the stock plummeting 17%. It was breathtaking. The single largest loss in a day of market capitalization in history. Wait a second. The second largest single-day loss? Well, that was also NVIDIA. It looks like it has a habit of getting clobbered. But then there's also a habit of people coming in and buy the dip. Will it happen again? If there are more revelations about DeepSeek doing much more with less, fewer NVIDIA chips, more compute, then NVIDIA stock is unfortunately not done going down. Though, I will say the pin action off this Chinese outfit did more than just knock over NVIDIA. We saw stocks like GE Vernova, the builder of so many power plants that are needed for these big data centers, just get hammered, falling nearly 22%. We saw a huge collapse in the merchant utilities, the ones with clean nuclear power, like Vistra Energy, Constellation, which dropped 28%, 21% respectively. So buying opportunity, selling opportunity? How about a do-nothing opportunity? Because I just don't know. As always, I told Investor Club open hand, right, what I'd be doing with the travel trust, but I didn't really have all that much to say because NVIDIA didn't have much to say. Now, NVIDIA, in a way, tried to help out in a positive, I guess, way, where the release said, quote, DeepSeek is an excellent AI advancement and perfect example of test time scaling, end quote. They also said that you still need significant numbers of NVIDIA GPUs and high-performance networking to make it happen. Reassuring? I don't know. Certainly not enough to get in front of this speeding freight train. All aboard! We do know one thing. Every time anything bad happens to NVIDIA, you can bet all the negatives will be out there in full force, along with those who think that the benefit from DeepSeek's open source AI offering are going to move away or don't need as much NVIDIA power. Salesforce, for example, has pretty much called this a tectonic shift in the AI world from hardware, which CEO Mark Benioff now calls a bit of a commodity, to software as a service companies like Salesforce, which are proprietary and can interrogate the data and create real value. Hey, the market ate it up. Salesforce word today, almost 4%. And a lot of it was the stuff that Mark was tweeting. I wasn't alone, I wasn't alone and feeling a little lost here. Apple stock rallied. I mean, ostensibly because they can now buy cheaper AI. Meta Platforms, even as it already spent billions on NVIDIA chips, took off because of a belief that it won't need to spend that much more money in the future. But Oracle, Microsoft, and Alphabet, they got crushed. And yet, they're also gigantic buyers of NVIDIA's chips. Should they've all gone up like Meta or down? I don't know. It's part of the confusion. And the real quandary is, why didn't NVIDIA say that it's become much more of a software company and that you need the hardware to run their software? It also would have been good to find out how many chips DeepSeek is really using. But it isn't. Think about it. If it was a lot, right, then our government would simply ban all NVIDIA exports to China. What a high-risk situation. If you're NVIDIA, you're really in a jam here. See, if DeepSeek really didn't need many chips to make its generative AI platform work, that could be very negative for the NVIDIA story, because then you don't have to order as many chips. But if it turns out that DeepSeek had hundreds of thousands of chips, like the American hyperscalers, then you'd have to believe the new president would make it much harder for Chinese companies to buy anything else. Whew. Now, how about all these energy and data center stories? Well, these were overheated. Stocks like Constellation, CEG, not the STZ kind, or Vistra, or Vertiv, the power system creator, or for the data center, or GE Vernova, which makes the turbines. These are all part of the quandary, because their stocks were up so much going into today that you could argue that today's hideous declines are barely even meaningful. Sure, Vistra was down almost 30% today, but that just means it's back to trading where it was in mid-December. I don't know. When something is that hard, when you really don't know the answer, you got to do something that's very alien. You have to sit on your hands, and you have to say, that one is too hard for me to figure out right now. For example, not that long ago, we sold some Broadcom for the Charitable Trust, with much higher than where it went out today. If this one stabilizes, I think it might be a buy because they have a ton of business away from the data center, and after this decline, the stock's no longer expensive. However, I don't know. I mean, it could be a freight train. How about the world of Arista Networks and Marvell Technologies? They fell 22% and 19% respectively. They're very good companies. But again, they're up so much that I don't know where the owners, what are they going to do tomorrow? Maybe the owners said, hey, look, maybe a group of analysts downgrade all these stocks. These DeepSeek revelations happened so quickly that many analysts didn't even have time to assess the situation. Of course, the money that streams out of these hot stocks has to go somewhere, right? And today it was flowed into something that had been pretty cold. So we got these absurd moves into the consumer packaged goods places like Procter & Gamble, or the retailers like Walmart and Costco. I mean, Charitable Trust was Costco, but come on. These kinds of explosive moves are totally mystifying to me, even as they were terrific for my Charitable Trust. Nothing's happening to these companies. Nothing. It's just sector rotation. So what the heck are we supposed to do here? Take some Costco stock and sell it because of rational exuberance? Just enjoy the win? I don't know. Believe me, it is tough enough to figure out whether to say to people, okay, Apple's up huge, and that's a big overreaction. I don't need to opine on Costco. All that said, the real issue is the former largest company in the world, NVIDIA, and whether numbers now have to come down because there will be a freeze in spending as clients reassess those multi-billion-dollar orders. Maybe it'll be like the pause in the internet build out of 2000 that turned out not to be a pause at all, but a collapse. At what point is that loss built in? Honestly, we don't even know if there'll be a loss. But there have been so many people saying that NVIDIA run is too much, it's over, and it was all about momentum, perfection, and dominance. But the momentum, perfection, and dominance have now been called into question. Bottom line, I have no view on DeepSeek yet because we just don't know enough. Sometimes you have to do the hardest thing in the world, and we play with an open hand on this show. We gotta wait. We gotta wait until we know more, rather than taking knee-jerk action and pretending that we know the answers. How about we go to Ian in Florida, please? Ian.
Jim, booyah. How you doing?
Not bad, Ian. How are you?
I'm doing okay. Doing all right here in sunny Florida.
Nicer place down here?
Yeah, actually,
I'll join you
investment in the club, of course.
Yes.
Very happy about it.
Thank you.
Second-time caller.
Oh, excellent.
Jim, I wanted to ask you, today was kind of crazy with this DeepSeek AI, and I've been looking at a stock that kind of goes hand-in-hand with NVIDIA. It's a data center, and it got really whacked today, to be honest with you. I think it's down in the low 104s. It's a data center play, and it's called a VRT. What do you think about it?
Yeah, it's like the inner plumbing's Vertiv. It's Dave Cody's the chairman. He's my next door neighbor. Used to be my next door neighbor from Honeywell. I have to tell you that stock fell so much that here's what's going to happen. When you see stocks fall $43 on a $150 basis, that means the sellers are not done. They will come back again tomorrow. They will break the chart. They will make things happen that will wish you that you bought this stock at 80, not 100. That's typically what has happened. I need to go to Jack in Ohio. Jack.
Hi, Jim. How are you? Big fan.
Thank you, Jack. Thanks for calling. What's happening?
Well, I got an RMD I'm going to have to take this year, and I'm trying to figure out what stock to go with in my portfolio. I've got a big position in Ford, and I'd like your opinion on should I hang on to it for a while.
Okay.
I am up to...
I'm sorry. All right. Well, here's the problem with Ford is they have big warranty issues. They're all coming back to haunt them because it costs so much to fix a car. Now, we have GM tomorrow, Mary Barra. I think she might report a good number, but I got to tell you, the autos are part of the economy that people are saying, we need rate cut, we need rate cut, we need rate cut. And Ford in particular, 5 times earnings tells me that something is wrong there. Oh, hold it. You know what we got to do? We got to go to Corcor in Illinois. Corcor.
Hey, Jim. Go Eagles, go Eagles, go Eagles. How are you?
Go Birds. Go Birds, man. We were all over the Birds this week. I picked my wife there with the dogs and everything. It was really something. Go ahead.
Yeah, first-time caller and also a member of the club. Well, my question to you is CMG Chipotle. What do you think? What's going on? You know what I mean?
Right. Somebody came out today and said that they think that the growth rate for next year is not going to be that high. That was a devastating call. And what did the stock do? It went up anyway. So my take is, look, I think Scott Boatwright's doing a good job. I have no desire to trade Chipotle. That's been a sucker's game. Let's just own it. And if it comes down, we buy a little more there. That's the Chipotle story. It's not a trade. It's an investment. All right, look, the decline in some of the market leaders today, I have to admit, it was just breathtaking. And I'm not willing to take either side of this trade until we know more about the impact from DeepSeek. I wish I could. Everyone seemed to know so much today. I'm making millions of calls. I didn't find out anything. Oh, man, I tell you, how is the fear of missing out shaping today's tape? I'm telling you where I stand on the latest parabolic moves and how diversification comes into play. Then, could the prices of corn, cattle, and oil keep heading higher together? What is that about? Let's go up the charts on the rally in these commodities. And later, I'm sitting down with a very controversial, the CEO of Beacon Roofing, as the company responds to a takeover, hostile takeover bid from QXO. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
It's not just about the ticket sales. It's maintaining that connectivity with her fans.
The power of a fan base.
She's built this billion-dollar brand.
She's able to do that in a pretty unique way.
The Swift Effect. CNBC premiere tomorrow, 10 Eastern.
Morning, everyone. Ready for the big meeting?
I have to write this project plan.
I just need to reply to 40 emails. Linda?
Oh, their date disappeared. Too many emails, messages, docs. That's why I have Grammarly. It's AI that helps me write faster and better everywhere. IT just cleared it for the whole company.
I was lost in the dark.
Grammarly for Business. Enterprise-ready AI.
Only the ServiceNow platform puts AI agents to work across your company. They deal with the small stuff that bogs you down.
Agents like secret agents?
You know, I once played a secret agent.
Oh, I missed that one. I heard you were great.
I was great.
This is our future, Ma. GoDaddy Aero creates a logo, website, even social posts in minutes.
Ow.
AI.
AI like it. Who wants to come see the future?
Get your business online in minutes with GoDaddy Aero.
As a financial advisor, you know building a retirement plan practice takes work. But it doesn't have to be all on you. Capital Group can streamline the job with a platform that helps you guide and grow clients more efficiently. Because we know you're just one person. Build your retirement plan practice with Capital Group.
CNBC. Live ambitiously. Take the bull by the horns every morning with Jim's Top 10. The biggest headlines, earnings reports, and Jim's hot stocks right to your inbox. Sign up now for free at cnbc.com/top10.
I'm Dr. Shannon Klingman, the inventor of whole body deodorant like Mando. It's clinically proven to block odor all day and controls odor for 72 hours. Mando's unique formula stops odor before it starts. That's my secret to better odor control everywhere.
You've got a glow about you, inside and out. Show it to the world with just 10 minutes of self-care. Meet Omnilux Contour, an LED light therapy mask clinically proven to reduce fine lines and wrinkles. Find out how you can improve your skin at omniluxled.com.
I've been using hers for 7 months, and I have lost 40 pounds. I have always had an issue with portion control. With hers, I'm able to control that. It is never too late to make a change. See if GLP-1s are right for you. Start today at forhers.com.
What happens when you let FOMO, fear of missing out, control your portfolio? You get eviscerated on days like today, where everything AI-related gets crushed thanks to some headlines from China. On the other hand, if you maintain a diversified portfolio, it can save your neck. For weeks now, we've been gripped by FOMO at the CNBC Investing Club. When there's FOMO, we often go the other way and sell into a parabolic move like we saw in so many data centers-related tech stocks today. Now, we trimmed back a bunch of Magnificent Seven stocks as they skyrocketed, and we know these moves can give up their gains in a second. It's been painful, as some of these positions, like Alphabet, have dwindled to the point where they're almost purely symbolic. But today shows you why parabolic moves are dangerous. There's no telling what can wreck a turbocharged rally. They just always seem to end badly. This time, it was NVIDIA stock that got laid to waste. Good thing we sold some NVIDIA for the charitable trust to right-size a position that had grown too large. I always say own it, don't trade it. But you have to sell something on the way, or else your portfolio will become the NVIDIA fund. And you don't want to be the NVIDIA fund, as we saw today. You don't want to be the Apple fund either, even as one came roaring back today. That was something. Discipline must always trump conviction. Discipline, conviction, go with discipline. At the end of the day, you always want a diversified portfolio because that's what saves you when whatever's been working stops working. We went out to the JP Morgan Healthcare Conference 2 weeks ago, and it was a nightmare of negativity because most healthcare stocks have been left by the wayside, and even the winners in the group, like Lilly, had recently given up the ghost. Take Kramer Fab Abbott Labs. That's a great company. It's had a very underwhelming stock, who we spoke to in San Francisco. Before the interview, CEO Robert Ford and I talked about how undervalued Abbott was versus its growth rate. But we couldn't think of anything that might change investors' minds. Save a big win, maybe an important series of lawsuits involving special infant formula. I was also marveling at all the good things Procter & Gamble had to say about packaged goods when they reported. But it meant as little as Abbott's accomplishments. Next thing you know, though, these two stocks are off like Musk spaceships. Abbott and Procter both rallied more than 3% just today. Abbott's now up 19 points to 129 since that conference. And weirdly, I bet they've got more room to run. Yeah, the fallout from this tech fall could be that dynamic. You rarely have a one-day buyer strike. They tend to last for ages, and the money that comes out of tech has got to go somewhere. Look, FOMO is an insidious force. Very few people actually end up making money when they join a parabolic move based on price-to-earnings multiple expansion, meaning paying more for the same set of earnings. When something goes wrong, the stock goes back to where the parabolic move started or even lower. That's what I think could be happening right now with the data center stocks. If you chase them in the last few weeks, you're kicking yourself today now that the Chinese may have come up with a way to use generative AI with a lot less hardware, a lot less heat. We're seeing the same thing in the nuclear power stocks as they're tangential data center plays too. Right now, you can see that they've the hardest hit because they have the least earnings from what could turn out to be the slowed build-out. Remember this day. It's a perfect explainer for why you can't lose your discipline and you must always be seeking diversification, even if it hurts you short term. Longer term, in this case, probably 2 weeks' time, it's worth it. Mad Money is back after the break.
Coming up, from commodities to crude to currencies, Kramer spotted correlations across the market. But what does the thread connecting the assets mean for where they're headed next? Kramer going off the charts. Next. Don't miss a CNBC premiere episode of Shark Tank. Tomorrow, 9 Eastern, CNBC.
For me, Squawk Box is breakfast with the most interesting people in the world.
It's a privilege to get to talk to them every day.
It's more entertaining than any other morning show, but you might get some useful information.
Squawk Box, weekday mornings, 6 a.m. Eastern, CNBC.
I fundamentally believe if we don't disrupt, we will be disrupted. There is a clear need for products that are going to make people safer, that are going to make environments better. That can be good for business, good for people, and good for the planet all at the same time.
Bitcoin is the best performing asset, but its volatility has kept many on the sidelines. Until now. Introducing the world's first 100% downside protected Bitcoin ETF. Capture Bitcoin's upside potential while staying protected. Asset management at a time of disruptive change. Calamos, today for tomorrow.
Do you have an old, outdated bath or shower, but you're afraid of the cost and the hassle of a lengthy remodel? Maybe you're having trouble stepping over a high bathtub and just feel unsafe? Whatever your reason, your bathroom is personal, and Jacuzzi makes your remodel personal from the very first call. Maybe you need a safer, easy entry shower with grab bars and a custom seat. Or you need to add a beautiful bath that works for the whole family. Or you're just ready to update your shower with style and quality that will last for years to come without breaking your budget. With Jacuzzi, you can have your own personalized bath or shower installed in just one day. And right now, we're waiving the installation costs. All with $0 down and no interest or payments for up to 12 months.
Oh my gosh. It is beautiful. It's incredible that they were able to do this in one day.
They were outstanding.
I've had a great experience with this whole process. It's been life-changing for me.
Your bathroom should be a reflection of your own personal style. From first call to install, Jacuzzi has custom solutions that are perfect for you. Choose every detail just as you want it and let your Jacuzzi team handle the rest. So your bathroom can go from this to this, this to this, or even this to this. Installed in just one day, and you'll love how easy it is to clean with no grout to scrub ever. Plus, they're built to last. All Jacuzzi showers are backed by a lifetime warranty from an iconic brand you know you can trust. Jacuzzi makes it easy to build the bathroom of your dreams at a price you can afford.
Don't wait. Call or go online now to jacuzzibathrymodel.com for a limited time offer. We are waiving all installation costs, and there's no interest and no payments for up to 1 year. Go to jacuzzibathrymodel.com or call 800-394-6512. That's 800-394-6512. Call now.
Ready for the big meeting?
I have to write this project plan.
I just need to reply to 40 emails.
Every day, your team gets sucked into endless writing tasks, and every day, hours disappear for everyone except Pam. Hey, Pam. Because Pam uses Grammarly's AI to write in a few clicks, not a few hours. It's one seamless experience everywhere, and it works for the whole enterprise. That's why 70,000 teams trust Grammarly.
I was lost in the dark.
Grammarly for Business. Enterprise-ready AI.
I know we saw a lot of crazy action today, but you want to see some really crazy action, got to go to the commodity space. Just huge rallies in corn and cattle and oil. You can think of it maybe as a Trump trade because this started not long after he won the election. Or you can think of it as a commodity traders collectively trying to hedge their inflation risk. Either way, these various different commodities are moving in lockstep. You know, it's actually rarely a good sign for the commodities. Maybe not for you, but for commodities. All right, that's why tonight we're going off the charts with the help of Carly Garner, a terrific tactician who's the co-founder of Harley Trading, the author of Higher Probability Commodity Trading, and our resident commodities expert. She gives us a lot of perspective. And also, we try to figure out what's good for you, what's bad for you, what's good for the traders, what's bad for them. I want you to take a look at this daily chart of crude oil futures in black, live cattle futures in red, and corn futures in yellow. Well, look at this. You can see that all three of these commodities have caught fire together, and although oil started to pull back, corn and cattle remain red hot. What's weird about this is before the election, each of these commodities got traded pretty separately, right? Which is what you'd expect because they all have their own supply and demand situations. In the last few months, though, they've been trading in the same direction, nonstop. Garner says this looks very similar to the commodity rallies we saw in 2022. Okay, we're going to see those later on, but it's taken from me. Inflation was rampant. I don't know if you remember that period. I do. Traders didn't want to miss out on a big move. As she sees it, we're now witnessing the same dynamic. Now, some of these correlations are nuts. Over the last 30 trading days, West Texas Intermediate crude oil futures, they've settled in the same direction as natural gas 80% at 7% of the time. Corn, 88% of the time. Live cattle, 90% of the time. Gold and soybeans, more reasonable, 75% and 79% of the time, respectively. For the most part, they've been trading in lockstep, but now oil's broken down. Garner thinks that oil's probably the leader, which leaves all these other commodities vulnerable in the coming weeks. She's also betting that the oil downturn will be persistent. We've got a strong dollar, high interest rates, lackluster demand from China, bearish seasonality, and economic weakness from the rest of the world. But there it goes, right? At the same time, OPEC hasn't been able to stabilize prices with its production cuts, and no amount of violence in the Middle East has been able to truly prop up the price of crude. Plus, we've now got a drill baby drill White House, which tends to push down the price of oil. All right, I want you to take a look at the weekly chart of the West Texas Intermediate crude. This is really compelling here. Since peaking in March of 22, that's the spike that I was mentioning, Garner notes that oil has consistently made lower highs. Okay? The recent rally was stopped in its tracks by the 200-day moving average at $80, all right? The previous downtrend line from which oil broke out earlier this month will now become the floor of support at $73. Right about where it's settled today. If we can't hold this level, Garner suspects that we will see oil fall to the mid to low 60s in short order. The next floor of support at 65 has managed to reject each sell-off since the peak in March of 2022. But the more times we knock on the door, the more likely it is to open. Put it all together, and Garner wouldn't be surprised if oil ends up sliding all the way down to its multi-year pivot line at $51. Hey, that'd be great news for us, wouldn't it? All right, now what about cattle? When you just single out the live cattle futures, you see a market that's fueling unsustainable inflation. And we know that when we go to buy beef, right? It's a nightmare. Live cattle futures are now trading over $200, which is $2 per pound. Okay, may sound like a great deal for beef, but keep in mind that's the price of the live cow and not the final steak. Garner points out that there's a reason the cattle futures have been roaring. In this country, we're currently facing the lowest per-head cattle inventory since 1951, thanks to perpetual droughts and a few years of obscenely high feed costs. Like coffee, high beef prices haven't deterred consumers, even if people prefer to go to places that offer relative bargains like Longhorn Steakhouse. According to Garner, the bullish narrative for cattle is deafening. As a result, we are getting a word of an uncivilized cash market where buyers are willing to acquire beef at any cost. You know what? That kind of situation rarely ends well. When you look at the chart, Garner points out that the last time cattle supply was similarly tight and managed commodity futures were this aggressively positioned on the long side of cattle futures, that was all the way back in 2014. The result wasn't permanently higher prices. Instead, we got a market top that took an entire decade to regain. Even so, many believers the tight supplies think the tight supplies are deceptive, and that the market's focused on the head count. But individual cattle are coming in at higher weights than ever, so the seemingly low numbers might not result in a meat shortage. Garner points out that cattle prices are bumping against a monthly trend line, the monthly relative strength index right here, okay? It has started making lower highs. See, that's a little bit lower than theirs. See that? That's like that. You got to pay attention to that. And they keep doing that. She thinks cattle can still go higher, but the gains would likely be temporary. On the other hand, the downside risk she thinks is big. The line separating the bull and bear, $150 or $1.50 per pound. And if high prices are the cure for high prices, so to speak, as we've seen in the past, then she thinks that 90-cent live cattle isn't an impossible expectation. Wow. We're all going to, don't even need to go to Longhorn then. It'd be great for your grocery bills, too. Of course, it's not just commodities that are trading in lockstep. For example, the British pound, the euro, they're running a negative correlation of over 90%. This is beyond my ken, but I'm a big believer in Garner. So let's go over to the currencies here. At the same time, the Japanese yen and the U.S. 10-year Treasury note have been settling in the same direction 93% of the time. Now, the yen has also been settling opposite the dollar index 91% of the time. According to Garner, such aggressive correlations are rare and generally unsustainable. This is actually pretty incredible, isn't it? Further, she believes that there's a sign that many of the trends we've grown to accept in recent months could be in the final innings of the game. If something surprises or disrupts one asset, volatility will bleed the other, and things can quickly become very chaotic. Just look at this daily chart of the 10-year note in green and the yen in blue, okay? This is because the yen suffers from a massive interest rate differential versus the dollar. A few days ago, the Bank of Japan raised their equivalent of the Fed funds rate to 0.5%. That's the highest it's been in 17 years. Even if the Fed cuts again at the next meeting, though, we'll still be above 4%. Here's what people do. Rich people, typically, big hedge funds. People borrow in yen, then buy dollars and invest in the 10-year. But as Garner sees it, something's going wrong here. Like we saw when the yen carry trade imploded in August, things would get very ugly. In the end, Garner's adamant that these obsessively close correlations are always temporary, especially in the commodity space, where she thinks a breakdown is inevitable. Bottom line, the charts as interpreted by Carly Garner aren't obscenely high when we're talking oil or corn, but oil could be vulnerable. Hey, by the way, she does think the cattle prices are an accident waiting to happen. Now, I hope she's right. Why? Because this is all hedging and creating inflation risk. Traders have been directly causing inflation. That's what's really happening. And sooner or later, that has to stop. And it could be very good news for you, the consumer, very bad news for the traders who own these contracts. I'm going to Tyler in Texas. Tyler!
Hey, Jim. Love the show. Watch it every day.
Ah, great. Thank you, Tyler. It's great to have you on the show.
Just wanted to get your thoughts on the executive orders for the wind generation and how you thought it might affect NextEra going forward. I know they were talking a lot about natural gas on the earnings call. And
right. Well, look, we did buy a NextEra as a trade, as a hedge trade on Vice President Harris, former Vice President Harris winning. It did spike oddly. But the wind stuff is very different from solar. Solar is something that the president has said he likes. Wind is something that offshore he really doesn't like. And by the way, nor does GE Vernova. So I'm not that worried. NextEra is a very cheap stock. Let's hope that somebody realizes that the 100% sourced in America and does a good job. Let's go to Stafford in California. Stafford.
Hey, Jim, how you doing?
I'm doing fine. How are you?
Good, thanks. Hey, I wanted to get your thoughts on JDTM.
JDPM?
TM, yes.
Okay, let me get that. JBTM. All right, I'm looking it up.
JDT. Yeah, that would say it was in the Barron's Roundtable this weekend.
Oh, okay, sure. Look, this is one of those companies I don't really understand. It's consistent gainer. To me, I've liked... we ought to look into this. I mean, this is kind of stuck to... It's food processing automation, which is kind of like IFF, but in a different way. I think we should look into this. This is the kind of company that I don't understand why it isn't dramatically higher, because it's been so consistent. So let's do that rather than cuff it and say, hey, I like JBTM. That's not good enough for you. We're going to do better for you. And if that's Stafford in California, and it's the Stafford that we beat, I just want to say thank you. The charts, as interpreted by Carly Garner, point to some pretty close correlations to the commodity and currency space, and she thinks a breakdown is inevitable in these areas. Now, much more money yet. QXO is aiming to acquire Beacon Roofing Supply with an $11 billion tender offer. I'm learning the latest with the roofing company's top brass. Plus, a major LNG player, Venture Global, went public last week, but with a much lower valuation than versus expected. I'm going to take a close look at the market's newest energy name. And, of course, all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Kramer.
Oh, that's very,
Right?
This store doesn't have agent force, so an AI agent didn't tip off the stylist as to what I might actually wear.
Yes.
Ooh, that's a commitment. Hey, bud, what do you think?
People can see you out here.
Yeah, right. Love you too.
Agent Force helps retailers prevent fashion fails. It's what AI was meant to be.
It's not about looking like you've got it all together. It's about feeling like you do. Make our new sugar-free your everyday sidekick. Own your ritual your way with Liquid IV.
There have been no new treatments for osteosarcoma in 40 years. This rare pediatric cancer starts in the bones and often spreads to the lungs. There are no treatments when it spreads to the lungs. Now, OS Therapies, OSTX on the NYSE American, is reporting immunotherapy trial results that could lead to a 2025 approval. OSTX, grandfathered into FDA's Priority Review Voucher Program. Revenue could reach $500 million. OS Therapies, stock symbol OSTX.
I guess I'm not the easiest person to please. I like things just right. That's why I love Redfin's home recommendations. They know what I want even before I do. A home that's just right.
Yes. Yes.
Powering sustainable growth in a changing world. Powering financial solutions that transform industries. Powering innovation with access to capital. Powering critical decisions with precise data and insights. Powering seamless execution in evolving markets. We deliver our entire global bank to power new possibilities for you. Barclays Investment Bank. Powering possible.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment. Call Coventry Direct to learn more.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
Our friends sold their policy to help pay their medical bills. And that got me thinking. Maybe selling our policy could help with our retirement.
I was skeptical, so I did some research and called Coventry Direct. They explained life insurance is a valuable asset that can be sold.
We learned we could sell all of our policy or keep part of it with no future payments. Who knew? We sold our policy. Now we can relax and enjoy our retirement as we had planned.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-514-7800. Coventry Direct, redefining insurance.
On a crazy day for the market with some huge headlines on the AI front, I've been keeping a close eye on a hostile takeover bid that might have flown under the radar for you. This morning, QXO launched a tender offer to buy Beacon Roofing Supply for about $11 billion, $124.25 per share. Stock closed today at $119.58. It's up $1.16. Now, this has been an ongoing saga. Starting in November, when the Wall Street Journal published an article stating that an acquisition offer had been made by QXO, but Beacon's management team wasn't receptive. Well, it's not receptive, believing the company will ultimately be worth substantially more than what QXO is willing to pay. Now, last week, Bloomberg reported that they're soliciting takeover bids from rivals. We got to find out if that's true. There could be rival suitors. Who knows? But what does it all mean for the building supply company that, I have liked for many, many years? Let's check in with Julian Francis. He's the president and CEO of Beacon Roofing Supply to find out. Mr. Francis, welcome to Mad Money.
Thanks, Jim. Great to be here.
All right, so Julian, I've always admired your company because you are the dominant company, 50 states. You do incredible work. Everybody knows that when we think of roofing in our business, we always think of Beacon. So how is business?
So, Jim, it's been a terrific run for us. I mean, this company's in great shape. We've transformed the business over the last several years.
Since you came in, frankly.
Since I joined the company, yeah, the stock's performed. We've done that transformation. The stock's performed. We're up 300% since I joined the company. That's about $4.5–5 billion of value created over that period of time. So incredibly proud of that. We navigated the pandemic. We focused the portfolio on our core business. We brought in some great talent, and we launched our Ambition 2025 plan, which was to grow top line, grow bottom line, and we've been continuing to do that. And that's been an environment where the macro has not been the kindest to us. I mean, we've had rising rates environment. We've had very low housing starts on a historic basis. You know about the underbuilding. And the commercial sentiment on the non-residential construction's also been a little bit soft and choppy post-pandemic. So we think we've been doing great, created a lot of value in a tough environment.
Well, now, Julian, I've got to tell you, my colleague David Faber this morning said a couple of things that really kind of astonished me. They said, look, in this new regulatory regime, they can make this offer, Brad Jacobs behind it, and it can get done in as little as 20 days. Is that possible?
Well, possible. I'm not sure that that's possible, Jim. Okay. But look, we are where we are. Obviously, we got the news this morning. It's going to be, it's an exciting time for the company. We've been trying to get the news out. We wanted to share the news that we had with QXO. But we're excited to get our Investor Day, which is March 13th. So we're looking forward to getting to that. Yeah.
Well, I hope that if David's wrong, then you get a chance. But it's fluid. There are many things.
Yeah, absolutely.
But we did some back of the envelope work here. There was a company that we own for my child trust called Home Depot, and we were really thrilled that they bought this company called SRS. Now I know they paid a lot for it, but it's worked out really well. If we use the same EBITDA multiple, we would get on your stock when the run 19, you get $204. So I'm trying to figure out how they came up with the 125. Now, of course, I could go to Brad for that. I've known Brad for a long time. But what is the price that you think, what? I think we've done a great job, but this price is one that I can't get us there in 5 years. Let's take it.
Look, I'm not going to speculate on what the board determines the value of the company is, but what we're dealing with right now is an offer for $124.25 per share. We determined at the time, the board determined at the time that was insufficient. We went back and tried to be constructive with QXO.
Constructive meaning, look, we can do better. Constructive meaning, this is where we could be. What's constructive mean? Constructive. I don't think you may think that.
Constructive is we try to engage with them, and we try to have a conversation. We offered them our long-range plan, let them under the hood, to show them what we were capable of doing, and to revalue the company based on what we were prepared to share with them. They said no. We tried once again to go in there. We offered them an NDA agreement that allowed them to continue to do what they've done today. And it was a short-term NDA that still allowed them to take the offer straight to shareholders. They said no at that as well. So here we are. We tried to be constructive, as I said, with engaging with them to see if we could get the value to where we thought it was the right number.
Well, let's puzzle through this. I think there are probably people at home who are saying, who is this guy who suddenly creates this vehicle and then goes after another company that's done quite well? It seems unfair. Should that even matter in the equation?
No, this is about shareholder value. I mean, ultimately, we are here, I lead this company in order to generate shareholder value.
Right.
That's fundamentally it. We do it through being a great company. We do it by hiring great employees. We do it by delivering roofs and doing hard things.
Right.
So no, it's not personal. It's not about that. It's about value and about shareholder value.
But could you argue that the stock would be somewhere around here without a takeover bid, or do you think it would fall drastically if Mr. Jacobs walked away?
Look, I can't answer that question directly.
That's a very fair question, because I think I know that I would have paid more for Beacon than the market was paying for it, because you can become, I'm looking what's happening in North Carolina, I'm looking what's happening in California, and I'm thinking, this is a stock I would reach for, and I might reach for more than the stock price.
Yeah, look, I'm very proud to be able to say that we operate nearly 600 branches across the U.S. and Canada. We are in all of these communities. Right. We're in Asheville. We're in L.A. We're in Augusta. We're in these places that get hit. Our people are part of those communities, and we're very proud of the work we do helping rebuild these communities. It's a terrific industry. It's a terrific job. We got terrific customers and terrific shareholders.
And just to be sure, people should know, you reported revenue CAGR of 8%. From 2019 to 2023, during a very difficult period for the housing business. It's not like you guys have been, it said, yes, and woe is me, the housing business not building houses. That's not been the case.
No, this has been something that, like I said, that goes back to the transformation and the launch of our Ambition 2025 strategic plan. We'd paid down a lot of debt. We had a very high debt load when I joined the company. We got down that. We saved $50 million in interest expense every year. We put that back into the business to refresh our fleets, to refresh our facilities, to invest in growth, and that's what we've been delivering.
Well, I hope the shareholders hear you. I think that you've done a great deal. I know it's made the best offer, whatever, but I wanted you to tell your side, and I think you've really told your side excellently. And I know, let the best offer win, but I certainly know that you've done a great job for your company.
I appreciate that, Jim. Very kind of you.
Absolutely. That's Julian Francis, President and CEO of Beacon Roofing Supply. Even from my days at my old hedge fund, I'd always say, this is the only one in the category that's a winner. Thank you so much.
Thanks, Jim.
Great to be on the show.
Great to be here.
Coming up, lightning doesn't just strike twice in Cramerica.
Booyah, Jimmy Chill. Booyah, booyah, booyah. Thanks for taking my call.
It strikes every day. Kramer is back in a flash with your questions. Next. Want to apply to be on CNBC's Disruptor 50 list? Is your startup disrupting the status quo? Scan this code or go to cnbc.com/disruptors to apply before February 10th.
Brian tried to stop you from switching to Coupa. This is Sarah. She's not a friend.
Sarah!
Brian!
Hey.
So I was right about Coupa, huh?
Tell me, what do you like most about their AI-powered total spend management platform?
AI that predicts, prescribes, and automates direct and indirect spend management. You?
I like how Coupa helps us mind our business.
That's interesting, because you seem to have a hard time minding your business. Your shoes are too big.
Wow, sick burn. Where were you? I got nothing.
At State Street, we know everyone's trying to get somewhere. Take the next step toward your future by investing in the S&P 500 with SPY. Getting there starts here.
I had 8 UTIs in 1 year. This inspired me and my partner Spencer to launch Eucora. Eucora makes effective urinary tract health products.
It truly works miracles. The peace of mind I've been looking for.
Go to eucora.com to learn more.
It's time to grow your business. Create a website. How? GoDaddy. Coding? Nah. But all that writing? Nope. AI. Done. Built.
Let's get to work.
Create a beautiful website in minutes with GoDaddy.
No application fee if you apply by February 12th at University of Maryland Global Campus, offering online and hybrid courses and lifetime career services. Learn about our more than 135 degrees and certificates at umgc.edu.
In a rapidly expanding $21 billion market, Laser Photonics, NASDAQ LASE, is a world-class manufacturer and R&D powerhouse built on 40 years of innovation, developing state-of-the-art technology for laser drilling time-release pharmaceuticals and pioneering counter-drone laser systems to neutralize aerial threats and protect critical defense operations. LASE delivers cutting-edge technologies across diverse industries, creating solutions that solve today's challenges and prepare for tomorrow's opportunities. Laser Photonics, thinking generations ahead.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Chat, how are we feeling about the pancakes?
Pretty mid.
You know what's mid, Bree? Your aura.
Dad.
In the time it takes you to master the slang,
Bussin'.
you could have bought a Hyundai on Amazon.
Woo! Boomer alert!
Lightning Round is sponsored by Charles Schwab. Trade brilliantly.
It is time for the Lightning And then the lightning round is over. Are you ready, Ski? Time for the lightning round, but I want to start with Michelle in California. Michelle.
Hi, Jim. Thanks for taking my call, and thanks for your whole team.
Oh, thank you, Michelle. What's going on?
I'm a new club member, been loving it so far, and on the call last week, you mentioned something about Danaher being kind of complacent. So I was wondering if you can elaborate on that a bit.
Well, I think, it's funny. Today was a big rotation day in the healthcare, and the stock went up. When I say complaint, look, I think that those guys are great. The Rails brothers are amazing. Even when I'm owns, they have the Rails brothers got a stake there in the Commander, so I love them even more. But here's what I mean by that. I want them to show me that they understand that there's been some serious underperformance here. But they could come back and say, we've outperformed for so many years, Jim, give us patience. I just want something that shows me that they understand that we're getting restless. I think that's a reasonable thing to say. And I do like them very much. Let's go to Paulette in Louisiana. Paulette.
Hi, Jim. Thank you for taking my call.
Of course.
What do you think about Katera Energy?
Okay, so we sold a little Qatar because it's up on a straight line. It was in a parabolic move. Now we're watching it and waiting, but I do think it is the cheapest natural gas company. It's very good for a president that wants export of natural gas. Let's go to Sam in Pennsylvania. Sam.
Jim, first order of business. I got to say, let's go Birds.
Absolutely. Let's go Birds. Absolutely. What's happening?
So, Jim, I got a question about a company, Grail. It was acquired by Illumina.
Look, it's a terrific science, just great science, but it is parabolic. It had a parabolic move, and those are going to be repealed. Please wait until that gives back a lot of the gain that it just had. It just started rolling over. Let's go to Eric in Michigan. Eric.
Jim, I'm calling on BlackRock today.
Okay, so BlackRock is a fundamental position for the portfolio for my Travel Trust. I think it's been resting. The way this stock works is it has a big move, then it rests, big move, then it rests. And the long-term growth rate of this thing is fabulous, and I think it's going to stay that way. I'd like you to buy the stock. Let's go to Susan in New Jersey. Susan.
Hi, Jim. Thanks for taking my call, and thank you.
Absolutely.
Thank you
for calling.
Team. Yeah. You guys shows a national treasure. My question is about DLR, Digital Realty Trust.
Okay, I want you to wait till that comes down. That's another stock that got overheated because of the data centers, and we cannot get involved with a parabolic move of a stock that could go much lower. It's 2.9% yield. I think 4% yield is probably right for that one. Let's go to Susan in California. Susan.
Hey, Jim, thanks for taking my call. Sorry, I have a bit of a cold. I'm calling about a stock that decided last October to put up to $42 billion capital to be buying Bitcoin. Since it started buying it, it's got around $30 billion, but it's worth, it's bought is $46 billion. Of course, the stock's jumping up and down, and as you well know, MicroStrategy is selling shares.
MicroStrategy. Okay, look, I say if you want to own Bitcoin, own Bitcoin. I own Bitcoin. You should own Bitcoin. Bitcoin's a great thing to have in your portfolio, but not MicroStrategy. Just own the Bitcoin. That's enough. And that, ladies and gentlemen, conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Tomorrow, kick off the trading day with Squawk on the Street. Live from Post 9 at the NYSE.
You're like my wife. I'm at the middle of the game. She goes,
your
hey,
wife.
don't you think it's time to text Jensen? I said, do you mind if I watch to see whether we win the game first?
I'm your TV wife.
It's time to
Let's just see if we can get this covered.
You're fretting about Jensen.
Did you call Jensen?
No,
Why didn't you call
Jensen?
Jensen?
In the middle of the game, you're more worried about Jensen.
It all starts at 9 a.m. Eastern.
Knock, knock. #1 broker here for the #1 hit maker.
Thanks for swinging by, Carl.
No problem. So what are all those for?
This lets me adjust the bass, add more guitar, maybe some drums.
Wow, so many choices.
Yeah, like Schwab. I can get full-service wealth management, advice, invest on my own, and trade on Thinkorswim.
You know Carl is the only front man you need.
Oh, I gotta take this, Carl. It's Schwab.
Have a choice in how you invest with Schwab.
Gold Bond believes touch says everything. It says, I see you. I feel you. And I know you. Gold Bond. Get in touch with irresistibly touchable skin.
Why do you invest? To win, obviously. To secure your future. Brokerages can't tell you exactly how. VectorVest can. With 2020 insight. What to buy, when to sell. Consistent growth. More wins. Find more winners with VectorVest.
Create tomorrow. Start today. With new investment products backed by superior risk management. Asset management in a time of disruptive change. Financial well-being accessible to all. Calabas. Today for tomorrow.
Meet Omnilux Contour, an LED light therapy mask clinically proven to reduce fine lines and wrinkles. Find out how you can improve your skin at OmniluxLED.com.
I have been using the GLP-1 injections through hers. I have lost 30 pounds.
Hers has changed my life.
I fell back in love with myself. See if GLP-1s are right for you. Start today at forhers.com.
What's your plan, huh? Do you have one? Talking about what is your plan for a reliable source of power when the next emergency strikes. Well, check this out. It's called the Patriot Power Generator 2000X, and it's from the family over at 4 Patriots. See, they took a page out of the military's playbook for portable solar power, and now we get to use it in our own homes. What's even better is that this solar generator can power critical appliances like your fridge, your microwave, and your CPAP machine, so that you're prepared for whatever emergency strikes next. So go on, check it out. It's over at 4patriots.com.
What you've been able to accomplish is phenomenal.
I always love it when somebody tells me I can't do something.
Make a decision. We'll take that deal.
I'll take your deal. In a second.
We'd love to take your deal.
Shark Tank, coming up next. CNBC.
We pull the curtain behind the money managers to show you how you can be a better investor yourself.
It's like he's drawn open the curtain on the secrets of Wall Street. It's just a great guide to have.
Go to cnbc.com/join Jim.
Coming into this year, a lot of us were looking for a major acceleration in the IPO market. Something you heard about repeatedly when the investment banks reported earlier this month. You know, they reported some pretty darn good numbers. Sure enough, last week we got our first major deal of 2025 from an energy infrastructure company. It's called Venture Global. Regular viewers might remember that Rusty Brazil, co-founder and executive chairman of RBN Energy and one of our go-to guys, mentioned this one in our interview last Wednesday, so we were kind of curious about it. See, Venture Global has rapidly grown to become one of the top liquefied natural gas exporters in America. And it was supposed to be a major deal now that we've got a much more fossil fuel-friendly White House. But the actual offering, which priced last Thursday night and began trading on Friday, turned out to be significantly smaller than expected. Originally, Venture Global was looking to sell 50 million shares at somewhere between $40 to $46 a piece. Now, that's a deal that would have valued the company around $100 billion. In the middle of last week, though, they raised the size of the offering from 50 million to 70 million shares, but they slashed the price range, almost cutting it in half, asking for 23 to 27 bucks. In the end, the deal price at $25, and Venture Global got a $60 billion valuation right out of the gate. Not bad, but also a far cry from what people expected. Then the stock fell $1 on Friday, closing at $24 before slipping another $4 or 17% today, and closing at just under $20. Wow, that's some gut-wrenching decline. The company's now valued at less than $50 billion. Now, this is still the largest energy IPO in over a decade. But when you look at how the enthusiasm for this one just evaporated over the course of a week, it's worth taking a closer look to figure out what the heck went wrong here. First, what's the story with this company? Venture Global was founded 12 years ago, and it's now working on 5 natural gas export terminals in Louisiana near the Gulf of Mexico. I'm sorry, near the Gulf of America. Their first facility began producing liquefied natural gas in early 2022, and their second one started running last month. Once it's fully operational, they'll be the second largest LNG exporter in America behind Cheniere Energy. When all 5 projects are complete, Venture Global believes they could produce 144 million metric tons per year. By comparison, right now, our entire country only exports 88.3 million metric tons per year. One of the reasons why I thought the deal would be received better. What sets this one apart is that they're able to build these LNG export terminals far more quickly than their competitors because they take a modular approach to construction. But there's also some controversy here. See, when Venture Global was building its first LNG export terminal, it lured in partners by promising cheap gas prices in exchange for the customers agreeing to lock into long-term supply contracts. With those long-term contracts in place, the company is able to obtain the financing it needed to build these complex facilities. But after Russia's invasion of Ukraine in February 2022, natural gas prices skyrocketed, at least overseas. Looking to take advantage of the moment, Venture Global started selling LNG cargoes at high spot prices, rather than selling those cargoes to its initial customers at the lower price that they'd been agreed to for years before. Management said they could do this. They can do it because the plant wasn't yet fully operational. But the customers were obviously upset. And Venture Global disclosed in its IPO prospectus that it's currently involved in arbitration proceedings to deal with this issue. Now, that's why I don't want to dive too deep into the financials here, because, yeah, look, if they have to start fulfilling those long-term contracts, low-price contracts ones, the numbers will look a lot worse. Still, Venture Global's been profitable for at least the last 3 years. Through the first 9 months of 2024, however, revenue was down 45% year over year, operating income was down 72%, and net income was down 79%. Hard to tell how much of that's because the numbers were inflated the year before, and how much comes down to lower spot prices in 2024, or some of the deterioration in the business. Venture Global's second facility just began production in December, which should help, but it's hard to say by how much. The numbers are just too noisy. I think that a major reason why the Venture Global IPO was far less successful than these guys hoped was the noisiness. While it seemed as though that everything was coming together all at the exact right time for this company, IPO coming merely days after President Trump rescinded Biden's ban on new liquefied natural gas facilities, they just couldn't get investors on board at a high price. After a couple of days of declines, Venture Global's valuation is roughly in line with Cheniere Energy. That makes sense, current market leader. You could argue it deserves a higher valuation because it's building new facilities faster than anyone else. And I would buy that argument. In fact, I actually down here would give my blessing to put on a small position, because this is a great story, even if the near-term numbers might be bumpy and the deal looks like it fell apart. But what does the Venture Global meltdown mean for the broader IPO market? Now, this was certainly an inauspicious start for one of the first major deals of the year. And I've been hearing a lot of people claim it was a very bad sign. Now, they may be right. I got a different takeaway, though. Different entirely. See, the hallmark of last year's IPO market was the fact that things worked pretty darn well for the few companies that managed to come public and the new shareholders, because the banks running these deals did a fantastic job in pricing. Basically, they priced the offerings low enough that they were attractive to investors, and people made good money on most of these deals. Sure, in some cases like Reddit, you could argue they left money on the table by pricing the deal too low. I call that a high-quality problem. In the end, everything generally worked well because no one got too greedy. I think that Venture Global, or whoever was responsible for the initial pricing range for that was floated, maybe the Goldman Sachs bankers, got a little greedy, trying to obtain a valuation that was double what people were paying for the industry leader, Cheniere Energy. And then they got slapped down by investors who saw what they were trying to do, and they just said no. I don't have any grand prognostications about what the Venture Global deal means for the IPO market. And I'm certainly not ready to say it's dead on arrival because of what happened last week. The bottom line. As I see it, Venture Global was an imperfect deal that was initially priced for perfection. In fact, I actually hope that everyone involved in the IPO market, especially those bankers who did a good job last year, but not last week, take note of what's happened here and try to avoid making the same mistake twice. If the investment bankers learn from their failure, then the 2025 could still prove to be a very good year for IPOs. I like to say there's always a bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow.
Tonight on Shark Tank.
I make fitness fun. We're getting lit. Did you see this?
I've grown this to 1.4 million in sales.
Oh!
I started my business so I could